Good morning, traders out there. Welcome back. It's another day here, and the stocks are moving. And there was some breaking news there in UNH, really shook up things, at least in that stock. We'll talk a little bit more about that. I might have to cut my HIMS position, but I'll tell you one thing, up about 7% on that. Want to see if I can get back towards 9% where I was yesterday. We'll be taking a look to see what happened in Trump. What did he just do to AI stocks? Did he light a fire under these AI stocks? We'll talk about it. We've been also pointing towards more talk about export controls coming and exactly what you got from Trump yesterday. So, of course, American AI being talked about in executive action. We'll talk a little bit more about that. We'll talk also about NVIDIA, AMD. It looks like, of course, these are the chip stocks that could be rocking and rolling. Tesla's disappointing earnings. Google's not the best either, right? I mean, overall, it's doing really well on the reaction, but it wasn't the best report. So we'll see what happens there. But Google almost back there towards 200, and we'll see if it can continue just chugging along. Now, Tesla definitely down big, down towards 311. We'll just cut the 300 spot. All things to be thought about, right? We'll talk a little bit more about it during the show. We'll get to the playbook, what stocks you guys can be trading, the sunrise report, what stocks are moving and why, and we can get to some of those earning stocks. So let's kick things off with today's playbook and what you could be possibly trading. All right, traders. So right now we're looking at a bunch of different stocks, right? Even those short interest stocks will be into play coming into today. But there's other plays that we can look at, right? And I think that's what we got to do is to diversify and expand there. So let's talk a little bit more about some plays that you could be looking at, like let's say a potential one on, of course, Apple. One of the things that I've been talking about, and we'll talk more about it in the Sunrise Report and when Michael comes on, is that, hey guys, I've been talking about potential China deal coming now, and I'm starting to see this setup. I've talked about Apple and how the setup here just seems to really make sense. And that's good signs, right? I think we got to really start looking for a trend line break here. And that trend line break could really start to bring things higher, giving us the ability to go ahead and get after this, right? I think you got a good opportunity here to break a long-term trend line. And I drew this back here on June, all the way back on May 5th. That was back here when the stock was over here, May 5th, and was looking to see if we'd make a run to that trend line. Eventually we have. Now we can expand that. Now we could be kind of breaking through that and starting to drive off of this. I think we could be back towards 220s, 225s with any mention of a China deal. So keep your eyes on that. Of course, Apple earnings coming soon. All things to be thought about. But yeah, this looks prime to get the run. We'll see if Apple can make a big lift. All right, let's get out of that. Let's go to CRM and software setup, right? I've been talking about how I think software is going to be the next space to get a nice big run, and CRM is setting up here for a long-term trend line break and a continuation back to the upside. We'll see if this can get back here into this block. This is about the 290 to 300 zone. I think for sure that looks like a good target. Now, above that, let's say 330s or 360s, those are going to be a little bit more, and it's going to take some good story. But look at the amount of volume that's come in the last couple of times. Big volume bars, and now we're starting to get closer towards above those volume bars. So I think buyers are ready to step up in Salesforce, and this chart looks prime for bullish action. All right, let's keep going. We'll talk a little bit more about another stock I've been talking about. And I talked about this one before last week. I talked about Airbnb and looking to see if this could get the lift. Of course, Hilton's earnings report didn't help things. It wasn't the best report. It definitely did take a little bit of a down hit. I'm looking to see today if they bounce back and it gets back above that 140. Because if this thing could really get rocking and rolling on the weekly and really start to rock above the 140s, start going towards the 150s, if it can make that run to 150, this could really be looking good on a longer term chart going into, let's say, this block space, like right up to 180s, 200 is kind of the outlook that I could see. And we're talking still, if it gets to that 200, a 44% move potentially for Airbnb. We'll see what happens with these trades. Of course, you guys can keep up with all the trades, and we can go through my watch list. We're going to go through some stocks, of course. Still got those high short interest watch lists that we can get to. Of course, yesterday, not the best day for me to start things off when I got back. But hey, I hit the gas pedal and paid a little bit of the price. We'll see if that gas pedal pays off today, and we'll see what else we can come up with. Let's keep going in the market. Let's take a look at the overall market, of course. And we could talk a little bit more about that UNH before we get to the sunrise, as this is getting the action right now, guys. This dropped fast, guys. This dropped from 291 down to 278 in an instant there. We'll see what happens with this. And now it can bounce back and start to come right back down. There's the rejection onto the VWAP around the 282. Could come right back down towards the 278 here. And this is what I was talking about UNH and why I didn't want to take a long-term position in it. A lot of traders were buying this dip and talking about how when would UNH start to come back. I talked about how this had to do with Medicare concerns. Little did I know it had to do with the billing concerns of Medicare here. And so really negative news. And it also tells me this could not be done. It could still be leaking further down. That's why I don't like to catch falling knives like this UNH. And what do we mean by a falling knife? A stock that had a long-term trend and out of nowhere, spike and fail, hard fail. That's a knife right there. And I'll tell you one thing, guys, I don't go playing with knives, especially trying to catch them. What's up? What's up? Big me. Hey, got to give you a shout out, man. Did you say what I think you said down there? Shout out to you, my friend. Getting funded. Love to hear it, man. Looking forward to hearing from your funded interview. Looking forward to seeing more and more from you, man. Congratulations. Shout out to you. A little money rain for you, my friend. And hey, now it's time to go make that real money, guys. And that's what it's all about, getting funded and making money. So shout out to you, Big Me. Hey, that's what I like to hear, man. And hey, now keep it simple. Go to what works, right? Remember that it's going to be harder than easier than it was in the eval. So what do we got to do? We got to keep up our skills, keep up to our risk to reward profile, and making sure that we're ready to rock and roll every single day. And sometimes it's going to mean that maybe you can paper trade a little bit and then go back to the funded account. Realize that you got to be in the zone and stay in that zone. It's especially important as when you start that funded account to really get it in the right direction so that you can see the prize and really get the payouts. That's what we're all looking for in the end. All right, SPY turning around. This morning it was looking really bullish. Now it's really starting to take a little bit of a leak. This has to do with more and more, of course, that UNH. But yesterday we did rip higher and continued going throughout the whole day. So it's okay if we start to get a little bit of some pullback. I mean, we are getting expanded away from the 9 EMA. I could see us pulling back slightly and then continuing to go higher. So we'll see what happens with that. Let's keep it going, guys. Let's go back to the market. Let's get to the sunrise report and talk about what stocks are moving and why. All right, let's get to it in this morning's sunrise report. Right, of course, markets are steady as big tech earnings and Trump Fed drama take center stage, of course, as the future snapshot. The futures were up, but now starting to take the hit, of course, as the market does pull back. Investors are digesting mixed big tech earnings, of course, renewed political tensions between President Donald Trump as he prepares for an unprecedented visit to the Federal Reserve. This is going to be interesting to hear the comments that come out of that. Increasing pressures on Chair Jerome Powell. Of course, we all know that there was kind of even documents written up for his firing. I don't think he's getting fired anytime soon, but the pressure still remains there. And Donald Trump taking a visit to the Federal Reserve. I don't know what that really shows, but hey, he's taking the trip. So, hey, pay attention. We'll see if we get some comments from that. Earning highlights. Let's go to Google now, as they had a decent report here. I mean, it really wasn't the worst. Wasn't anything that blew it out the waters, but the results are really showing it here in the price action. So let's get to the stock. Let's take a look at the price action here as Google is ripping higher. Let's go to the 15 minutes so you guys can really see the results off of the earnings report. Let's talk about that as their EPS came in at $2.31 versus a $2.18 estimate. Revenues at $96.43 billion versus a $94 billion estimate. YouTube ads at $9.8 billion versus a $9.56 billion estimate. Google Cloud here at $13.62 billion versus a 32% year over year growth outlook. So Google Cloud continuing to grow, YouTube ads continuing to grow, revenue overall looking good, and CapEx from 2025 raised to $85 billion from $75 billion. AI expansion is driving spend as Gemini hits 450 million active users daily. Net income, $28.2 billion, up 20% year over year. We're very excited about partnering with OpenAI, said CEO Sundar. And he was highlighting also the Google Cloud integration with OpenAI. And that is definitely paying dividends, as we saw that number that I just mentioned from Google Cloud that's up 32% year over year. So overall, Google isn't looking too bad. It's continuing to rise. A lot of people were hitting this because of search engine and things like that. Well, there it is. It's continuing to push. It's almost up there to 200. And the deal with OpenAI should keep them up there with the search conversation. So this could just get started. Right. And if the big boys are going to rock and roll, that's when the market really rocks. Take a look at Amazon right now. Take a look at Meta. Take a look at Google. Right. Apple's just right there. Nvidia's at highs. Yeah, we're looking like breakout city, guys. We're not looking like turnaround city. So we need to stay in that bullish sense here. Let's keep it going with the sunrise. Let's go over now to Tesla and talk about the Tesla Dragon. And it looks like it's getting burned this morning as it looks like it did not get the full charge. EPS here at 40 cents adjusted versus a 43-cent estimate. Revenues at $22.5 billion versus a $22.74 billion expected. So revenues missing again on the second quarter. Not what you want to see, of course, when revenue is starting to really show declines. Auto revenue at $16.7 billion, down from $19.9 billion a year over year outlook. So auto revenues are down. Sales are down. It's not looking good here at Tesla. Regulatory credit sales nearly half. That's not going to help things. That's going to impact the demand. Delivery delays expected due to tariff impact. Things are not looking good here, at least underneath the hood at Tesla. Net income at $1.17 billion, down from $1.4 billion year over year. And Musk warning that we could have a few rough quarters. Yes, he said it, guys. He said a negative comment there. That's not good at all. Robotaxi, though, rollout expands, but trails Google's Waymo, and things to be thought about. But yes, definitely Tesla, could it potentially go and break down back below 200, maybe 100? Who knows? I'll tell you what, though, if Tesla gets back down towards 100, I'll be willing to invest in it. I think right here, I'm going to leave it alone. If anything, I think this looks like a short today. We'll see what happens. It might be a tough short today, but in the next couple of days, it's setting up for a prime time short. IBM. All right, let's go to IBM as they take a hit there, and software revenues at $7.39 billion versus a $7.43 billion estimate. And EPS and total revenues beat, but investors are still focused on the miss overall. We'll see what happens here in IBM. It is down significantly, but of course, this stock made a huge run, right? So other than that, I think this is just kind of staying within a channel. It could pull back a little bit further. Nothing that excites me about IBM, but it's something that I'll keep on the radar. Let's move over to American Airlines. And just as it was ready for takeoff, now it's clear for landing as American Airlines coming down here 6% off of their earnings report and taking a hit here. Q3 EPS guidance now to 10 cents to a negative 60 cents, worse than the prior estimate of a negative 7 cents. So the EPS really looking ugly in towards the future here. The full year outlook reinstated at a negative 20 cents to negative 8. American Airlines will be struggling here, but something tells me this could turn around even on a day if we have a nice little bullish sense. Love also getting hit down with this. We'll see if these start to bounce back. Of course, they recently were starting to look really hot. DAL was back there to 55.30. So this could be the day where it gets into the gap zone and gives you the opportunity before the next lift. Let's go to T-Mobile now, TMUS, of course, and that's been doing really well off of this report yesterday. Really nice pop, long-term trend line to look for. Now this really looks strong, guys. This looks like it could really get going. T-Mobile, really nice pullback to the support, held it to the key. Now you're seeing what? 1, 2, 3, 4 times the cut down towards the 220s, reversal, bullish engulfing candle. Now we can look for anything in the throwback range, right? Anything in this range is going to be looking good for throwback looks. So I'll be watching for T-Mobile to continue to lift. And this could be a nice swing alert on T-Mobile here. Earnings per share were at 284 versus a 267 estimate, and revenues at 21.13 billion versus a 21.02 billion estimate. All right, let's keep going. Let's move over now to Las Vegas Sands, or as I like to call it, Macau Sands. And that is hot, hot, hot as it starts to come and go for that trend line look that we were looking at just prior to this. We talked about this on the 17th, about a week ago. And where was that stock? It was right here, right? It was right on the 9 EMA, looking for 9 EMA recoveries back to the upside. Just that move alone, 6% off the earnings, with EPS coming in at 79 cents versus 53-cent estimate. Huge beat there on the EPS. That's a really good insight there. Revenues at 3.18 billion versus a 2.83 billion outlook. So Las Vegas Sands looking really, really good. And that's going to help a name like Wynn also do well here. The resorts and casinos are doing awesome. Do we need to talk about China? Oh, I think so. I think so. And I've been talking about how it's time. It's time. And it was time maybe even a couple of days ago. We were talking about how this looked like it was ready to start getting primed to run again. And that's why I even like Baba off of that bottoming. I talked about that when it was here at 115. I think it's time for China to make another run. So we got to keep our eyes on this. To wrap up, of course, the Sunrise report, we'll go to a couple more names here just to kind of run through this. Let's get to CMG as, of course, no guac for Chipotle now. Of course, the CEO has left, and this looks ugly, guys. This looks like it could really start coming back. And for all the investors that were in Chipotle, if you didn't take your money and ran when the stock split happened, well, you're not looking so hot now, guys. And this definitely top ticked on the split. So the split did not help Chipotle. I thought it would, but it actually is causing them disaster here. The revenue's missing here. Full year same store outlook cut down. It is not looking good here for Chipotle. All right, guys, we'll see what happens out there. Of course, Japan deal was announced. The EU is in progress, trying to make deals there. And we'll see what happens with the S&P 500. It closed at a record 12th in 2025. Dow just 4 points, but new all-time highs. All right, that's going to do it for, of course, the Sunrise Report. We'll keep things going. We'll bring on Michael Nass in just a second when we kick things off into the show. What are you guys watching this morning? Time to catch some comments in the chat. Good morning to you guys. Take a look out there, guys. Let me know what you guys are watching in the chat, and we'll definitely take a look at some of the stocks out there. All right, let's keep going, guys. I'm looking into the small caps right now. Those are looking pretty decent. There's a LIDAR play that is just absolutely ripping this morning. It is just booming, guys. I talked about these LIDAR plays and how they could make a move a little while back, and how in autonomous, these were the types of plays that you want to own, even Mobileye. But we saw LAZR, LAZR, right? Start to make a move there, and looking for these names to kind of keep pushing. So I'd be watching to see if this one can move off of that LIDR, right? And we could start to look for a lot of these to make a move, right? AUR, has another one that we can take a look at. There's a lot of these LiDAR plays to watch. We'll see what happens with this one if it starts to get rocking and rolling. Not looking too bad at all. I am also keeping an eye on this Lumen Technologies. I think it could start to make a rock and roll type of move higher. There's so many names, guys, that keep watch. So if you guys have a stock you guys want to talk about, throw it up there in the chat. Let's keep going. It's good to see you guys out there in the chat and, of course, out there on YouTube. Smash the like. We'll keep taking a look around in the market to see what we can come up with this morning. We can go to my watch list and take a look at what stocks are kind of leading that action, especially like the 5-day price trend, right? This FLNC that I talked about here at right around $8 when I started to bring this one up. And this has to do with all about energy storage. I talked about it with BE and how this would be good names to look at for that continued run. This has held the trend line really beautifully. We'll see what happens with these names if they can continue to run. Ethereum, of course, catching a little bit of a bounce here. And of course, what do you see here? My lithium names, guys. I'm a little annoyed. I don't have SQM. I should have it down here, guys, down here at 37. I talked about it on that day that I'd be upset that I didn't get it, and that's exactly what I am, guys. A little bit upset that I don't have some SQM. This is a long-term trend line break, guys, that I have a feeling when it's back at like 120 in like a year or two from now, I'll definitely be scratching my head. But hey, I gave it to you guys here. Gave it to you guys first. It's up to you to make your shot. But man, SQM, ALB, looking really good, guys. Really good. The lithium is changing right there. And that's what it is. It's a change in the overall outlook for this material. For a little while there, it was like push it to the side. Now it's like we want lithium and we want to have access. A lot of this coming off of Trump's comments and more comments of rare earth. All right, guys, let's go ahead. We'll finish that up. We'll get towards the show action. You guys smash the like. Let's really kick things off. Start that countdown and get to the trading action. Google wants 200, baby. You ready to get back to the trading action?
You aim, you shoot, and make money.
It's going to be a great day. You guys know where you're at. What up out there, traders? Let's get things started. Let's go ahead. Let's bring on Michael Noss. What's up, man? How we doing?
I'm doing fantastic. Just gapping around, moving all over the place. I've been watching the pre-market action. Looks like a wild day ahead. A lot of economic stuff.
Wild day indeed. We'll see what happens with that. We did get some economics to come in there. We can review it in a second here. But yeah, a little bit of a spike, a little bit of a down move, and that surprise news in UNH. We can talk Tesla, Google. I mean, so much out there. And man, that UNH classic story of why I can't buy those falling knives, man. It just seems to be like decisions where you look back and yeah, there's some of these that come back and give you like big gainers, but there's some, and the biggest thing, anything with DOJ concerns. I've said it on the stream before. I said it when it was first happening. I just like to stay away from that, right? Because it's just a bomb of a headline, right? And when you see that kind of bomb of a headline, there's not much reaction you can do but to hit the out button, and it's probably going to be a painful out button, right?
Well, it's the same as holding through earnings, right? Net, it should probably even out in the long run, whether you have a big gap up in your favor or a gap down against you or whatever. But the question is, do you want to deal with that volatility, or do you just say, right, I'm going to sit out, wait for all that be
better
done?
Place. That's just what it is, right? Like if we have there's a million opportunities and then some, right? So what do we need to do? We need to distinguish between what's higher quality and lower quality. If we don't do this, what happens is, yeah, we could trade everything under the sun, but we probably won't have consistency. And that's what we're all looking for, right? At the end of the day. And that's the part of the game. I think that's also part of the game that Michael tries his best to stay away from, right? That inconsistent trading. That's why he's so systematic and trying to let the systems trade it, because at least in that case, he knows that he's staying within his walls, right? His barriers, his criteria that he wants to stick to trading, versus how some traders do it and they start trading everything underneath the sun. They go from UNH to a small cap to a large cap to which you can do with time and years of experience, but
Mhm.
it's not for the beginner, right? Let's just be honest. It's not the beginner that can trade opening range breakouts, penny stock flyers, then trade range breaks in large cap stocks. It's hard. It's hard business, guys, being in the stock
Yes.
market. But let's talk about active catalyst for today. Today, I'll go to your charts, my friend. What are you looking at? What's caught you by surprise? And we can talk a little bit more.
Yeah, just have the UNH up and that's down here as well. But mainly it was just the fact that there's not any huge numbers, but there's just a lot of, 2-star market moving numbers, right? We already had jobless claims and that kind of thing. And then we have PMI, manufacturing and services. Then we have new home sales. So just kind of sprinkled throughout the whole day, there's these big events. And then you combine that with the fact that and Google, one of the biggest companies in the world, and Tesla just reported earnings last night, makes me think, it's game on. And the fact that they didn't both go in the same direction. So you
Yeah.
have, all of these events occurring that could be bullish or could be bearish or could be pulling us up, could be pulling us down. That to me just leads to a lot of back and forth action, which again, as traders that's what we want, right? We want that back and forth action. We want things to rally and then sell off and then rally again, right? We talk about it all the time. When you have that kind of day where the market just either rips or tanks off the open and then chops around all day, those aren't as much fun because unless you got into that move, there's nothing to do.
Yeah.
So I want to see a rally that gets sold off and then a big dip that gets bought and that kind of thing. So yeah, Google and both Google and Tesla are setting up this kind of VWAP to VWAP setup, right? We have Google been grinding above every time it's hit VWAP all morning. There's been a big buyer there. So we're going to watch to see if that breaks. And then also on Tesla, TSLA, it will be the same thing where pretty much every time we've kind of gotten above or near VWAP all morning, there's been a seller. So now that we've kind of separated from that, we're going to look to see if we can gap and close above that. So that'd actually be a kind of pretty interesting hedge to be long Tesla and short Google if both of those things trigger today.
Yeah, it's an interesting one, and we'll see what happens with that one. Of course, a lot of these mega cap stocks right at close to all-time highs now. And I think that's an important outlook to catch, right? I mean, that just goes to show us where we really are in the market, right? I think that we talked about it here of how there was a little bit of a slowdown there for tech, but now we're starting to get a ramp up, and it makes sense. The big boys are reporting, right? This is when they move, right? A lot of times they move during these earning seasons and they get this big push, and then they slow down a little bit, right? And then they start ramping up again as earnings come back around. Of course, a lot of concerns were with Google and their search and things like that. Doesn't seem to be affecting things. Of course, that OpenAI partnership will definitely help it and kind of reassure that concern about search. So, hey, things like looks like Google's looking good, Meta's looking good, Amazon's looking good, Nvidia's looking good, Tesla's struggling, but hey, it's not looking bad underneath the hood. I think like Apple is another setup that I think is looking really good. I put it on the playbook for a long side look. I talked about potential China trade coming. Of course, yesterday we got more Trump conversation with American AI executive action. And what was mentioned? More export controls about how AI chips need to be able to go to different places so that we can stay on top and things like that. What is that? That's just signs of what's coming for the China deal. I think that's 100% what it is. It's ways to leverage into the China deal that, hey, we're going to take this off, this export control off, but you give us this, right? And so it's just tactics right now. And it's actually interesting that we're getting the tactics through the public markets, like the public media, versus behind closed doors. I think this is publicly like, hey, China, here, we're giving you this. Here, we're doing this. Like almost like we're doing it with good hand and goodwill, right? Like we're doing this to help you guys. Now you guys need to help us with a good China deal. And what could
Well,
what
and
go ahead.
it's just like we've always said, right? He's just going to at some point he's going to find something to kind of hang his hat on so he can declare victory, and
Yeah.
this whole tariff thing just kind of completely goes away and we move on. So
We know what the victory is, right? Stocks at all-time high. It's still victory, right?
Yep.
Regardless of the way he's doing it. If the market can continue going higher, he wins, right? I mean, that's what I think he considers his presidency focus. It's not his approval rate. It's how much money he can put in people's pockets.
Well, and it's the beauty of it is it's not just America, right? So we talked about
Yeah.
this yesterday, right? We had
Not just America.
Japan up 5% in a single day, just absolute, just insane breakout here in Japan. If we do the ACWX, this is one of my favorite ETFs. This is all country world ex US. So this is how the rest of the world is doing. If you pull the US out, smashing into new all-time highs, and from the low, just huge. And then look at this day yesterday. So big gap up, huge rip. Again, a lot of this is going to be the Japan move, but just showing that, we're talking 30% off the lows here and new all-time highs, and hit new all-time highs before the US. So the rest of these, or if you go to like EWC, which is Canada, right? New all-time highs, shout out Canada. EWU is the UK. New all-time highs, just everywhere in the world is just wrapping. It's just, and that's, I love it.
Well, there was a while there, right, where people were trading elsewhere, right? U.S. markets were going down, and people were trying to look for exposure elsewhere, and it was really kind of paying dividend, right? It was giving them the cash. I think at this point, what's actually going on is some of those gains were brought to our market, and then now being re-put on in Europe and other places. So like new positions actually willing to step up here. And that's good signs, right? Because that means they not only made some good money, but are willing to put that money back into work again. I think
and
this shows the global bull market, right?
Well, yeah, it's a breadth thing, right? We talk about it all the time, intra-US, but right, that's just very US focused. And we say things like we want the IWM to participate because that shows that there's breadth with inside. But we got to remember there's a whole world out there of people who just don't care about the US at all. And if they're making money, then it's just going to be better. Means they're more travel, more spending, more buying. Because if the people in the UK, if they're ripping, well, they got their Netflix subscriptions, right? They're buying their iPhones. They're, if they're building computers, they're doing so with NVIDIA chips, right? So even though it's one of those, a lot of people say, well, I live in X country. What do I care about Y country? It's like, well, that's what trade is. So when ACWX is ripping new all highs, this is just the rest of the world, which is way bigger than America, making a bunch of money, and they're going to buy stuff, and they're going to buy a lot of, again, US tech, that type of thing. So they're going to go to Google and buy their Gemini thing. They're going to do their Google searches. They're going to do whatever it is they want to do. So that's just the economy doesn't do well or doesn't do poorly, and we don't have to worry about recessions and blowups and stuff when markets are just cracking new all-time highs, because people are just feeling richer, right? Whether or not they are in total, they're feeling richer, so they're more likely to spend money.
Yeah, I mean, all-time highs. If you're not making more money in your portfolio, then you go fire that guy, right?
Yeah,
like that's just the way it works, man. And I think definitely retirement accounts are looking better, right? And when retirement accounts look better, people feel the pressure relieve a little bit, right? And so even though we are seeing some signs of maybe small inflation and things like that. Now, another thing that you mentioned there, I thought that was important too, was tariffs are impact on countries, but if countries are booming, they don't care about the tariffs, right? But now if those countries were struggling, it'd be a different story. right?
Well, and that's right. That's a huge point, right? I think to harp on is that if you're in the UK and your market's cranking to new all-time highs, your unemployment rate's super low, your consumer is really, really strong, and they go, "Hey, it's going to cost you an extra 2% to buy this widget from America." You go, all right,
Okay.
right. I'm going to eat it. If we're in 2008 and everyone's struggling and the markets are at lows and people are worried about retirement, and then you start to crank up a couple percentage points on what it is they're going to buy. Yeah, that's a different story. But
Yeah.
again, it's one of those. It's very much a weird cycle. But markets and new highs creates good psychology, which creates market and new highs. And right, this is one of the reasons that trend following works so well. And you don't want to just be selling the market because it's up, is because you have this kind of sentiment cycle, and that continues generally until there's some sort of shock that nobody sees coming. The whole thing is that as soon as you think you know what the shock is going to be, it's kind of too late, right? Because it would have already hit or something would have happened. The only time I remember my trading history that you kind of knew the market was going to tank was COVID. It's because you could kind of see this wave, and it all happened in like a matter of days
Yeah,
to weeks.
it took a little while though. It took a little while, right? I mean,
Well,
there's
I remember
weeks there that
punching. I punched a cash during when it was in Italy. That's when you really started to look and say, "Oh yeah, this is no big deal, right? This isn't what
yeah,
SARS or monkeypox or whatever. This is."
yeah,
So then
no,
you,
when I saw some pictures on Reddit of like China, I was just like, "Oh my god, what is going on?" Like
yeah.
this is 28 days later, zombies coming alive kind of stuff.
But yeah,
So
but when it was like when it was the great financial collapse, and again, I was working in the hedge fund industry here, so I remember this. There was a lot of disbelief until kind of right here, and this is where it kind of hit most people, is when it was kind of already too late. That
yeah,
things were, right in this area is when Lehman and Bear went under, and by
yeah,
then you've been hammered so much. So whatever stops us here, my point is we don't know what that is going to be. It's just going to kind
yeah.
of come one day, and
And the
that's why we
markets
trend
can
follow.
continue going, right? Like I know that there's some people are going to say, but this is synthetic. This is synthetic.
They always
Well,
say that.
no, but Michael, it's. I think what it's more along is yes, it is. Who cares? Who cares? The
Well,
market doesn't work in this way where it's just perfectly logical. No, that's not the
going
way things work, man.
going back to 2008 again, I remember this whole time the amount of times, like, we would play drinking games with CNBC. Every time they said double dip recession, you'd take a
Yeah.
shot, because it was just all the times like, no, no, we're gonna have another recession. It's not over yet. This is gonna be bad. And that happened the whole way up, until
It's how it is.
2020.
Especially, I
Right. And
think
then
one thing I'm noticing, Michael, at least from like just talking it out here too, is that the rationalness should be more on the upside than the downside, right? Like I feel like the irrationalist gets really quick on the downside, right? There's the end of the world panic really quickly,
yep.
but instead we should be like that on the upside, where it's like this is going to the moon is really not a bad perspective to have when you look at charts like this, right?
Well, and statistically speaking, you're gonna be right 75% of the time. So why I love Tom Lee so much is he just leans into this, right? He keeps saying, and
Leans
he's gonna
into
be
the
right.
bull side, man.
He's going to be right 75% of the time. And you saw it with Google yesterday. Companies are making more money and stocks go up.
They
I
find
can
a way, man.
find the chart again. But yeah,
Good
when
stocks
stocks
find
go
ways
up.
to make money, man. Good stocks find ways to make money, right?
So the question is always, you got to ask yourself is, do you believe in capitalism? If not,
Mhm.
you should probably leave. Because if capitalism works, the market's going to go up over time. Right? There's going to be
Well,
hiccups on the way up, but they'll figure out. If you believe the smartest people on planet Earth are going to learn how to make themselves rich. If you think the next Elon Musk born, who's like 13 right now, is going to figure out how to invent something really cool and make himself super rich, then you buy stocks. And if you don't believe that there's a lot of smart people out there who are going to figure out how to get rich, then you short stocks. That's kind of like the simplest way I
no.
put it.
Yeah, the way I view it is even if there's not smart people, there's smart AI now. Boom.
Yeah. Well, you program an AI, yeah, well enough, and you say your job is to get as rich as humanly possible. pop that into some kid's head somewhere, and away you go. But yeah, if you believe in greed, the market goes up. If you believe at some point we're going to stop being greedy and we're going to want new things and cool things and all that kind of stuff, then be a doomer, have fun.
No worries, Rando. We'll survive. Your mom is going to take us to the promised land, Rando. That's what it
Yeah.
is. All right, guys, let's go ahead. Let's get towards more of that stock action. I hope you guys appreciate that conversation because to tell you the truth, guys, that's the gold. That's the gold that we try to give you guys because really when you start to really hone in on things, you're going to be able to really see that, hey, I got to be able to play upside. Just got to time it the right way. It's okay to play some downside, but it's very limited action in the long run. So it's okay to be a bear sometimes, but you can't stay bearish. That's one thing that I'll tell you guys as being, I'll call the resident bear here. You can't stay bearish, right? Staying bearish is a bad thing, guys. It's more about playing it for opportunities and moments, right? There's elevator moves, but they don't last long.
Day trading is completely different, right? So it depends all about time frame. So all the time frame we were talking about there is over months and years. We'll drift higher over time. Doesn't mean we obviously go down next week, right? If you go to a weekly chart, there's a lot of up weeks, a lot of down weeks. So if you can time them correctly, go nuts. But there's just going to be more up weeks than down weeks, right? So yeah, facts. I love Tom Lee just because everyone labels them as like a perma bull. And he's just you hear him ask that, and he just says, "Listen, stocks go." He's like, "I'm a stats guy." He's like, "I'm gonna rate 75% of the time, and
yeah, I mean,
25% of the time I'll be wrong."
He's a little exuberant. I think it's part of the suits that people can't handle, but we won't talk about the man's suits.
Are you talking about Tom Lee or Dan Ives? Dan Ives is the one.
Yeah. There you go. Dan Ives. Ives.
He
Sorry, I
dressed
confused them both.
crazy.
Oh my God. I don't know if I can handle those suits, man.
I've met him a couple times in real life, and he's wearing that stuff. Like we're going out. I went out to a bar with him. He just walks.
Yeah,
and he's just wearing it. It's like
he's bubbly. He's bubbly, man.
I just kind of assumed that he had like, okay, I'm going to go on air and let me put on this crazy getup, and then just let me wear something normal when I'm done. I'm like, no, that's him.
All right, guys, let's go to a little LiDAR talk. NVIDIA LIDR combo there. And wouldn't you know it? But I thought LiDAR was dead. I thought it was all about FSD. Well, there you go, guys. Yeah. It's not just one way. That's the truth. A lot of technology is not just one way, right? I think about this way, now like phones focus a lot on different technologies, but I remember there was like a lot of peer-to-peer sharing where you had to be like close to the next person, right? And now you don't got to do that kind of stuff, right? This is how technology can change over time, guys. Just because FSD is winning today doesn't mean it's going to win. And if you know Waymos, then you know that it's not just FSD, right? That's going to win this game. It's multiple technologies here. So LiDAR continuing to rip.
And the argument that I've always heard is why not both, right? Because
why not both?
So for those who don't know, just to zoom out of it, what we're talking about is there's like two camps of autonomous vehicles and robots. One of them thinks LiDAR is the way to work. And LiDAR essentially just works like radar, right? It sends out a piece of light, it bounces back, it gets some information on how far things are, and it maps the world that way. Where the other camp is computer vision, where they just think you train an AI to be able to see through a camera the same way a human does, and that there's these different camps. But why not both, right? Like, why not just have LiDAR for things the camera can't see, and maybe the camera does better? So yeah, this is insane. First of all, 270% gain from yesterday, and the crazy thing is that was pretty much all capturable. There was no gap here. So this news came out when the market was open, and things have been kind of running ever since. So this is one of those where the early birds definitely got paid there.
Yeah, I mean, I've talked about how you're going to start seeing the shift towards these, and I've talked about also why not look at the ones that have had deals with NVIDIA. If you think about it, LAZR also had a deal with NVIDIA. Why are they going for these? They're small, they're cheap, and they can get access, right?
Yep.
Simple as that. Simple as that, guys. So hey, just keep an eye out, guys. We'll see what happens. And I think this is just the start of what you're going to see more and more in this space, and you continue to watch for it. And that's why you're seeing more things. I know that we're not talking about it, but like QS and batteries and lithium, and this is all going to be moving. I mean, it's crazy moves. But if you stay with these and you look at long term, you just might be able to find a nice runner. So sympathy plays at LAZR today. Definitely. I'll be watching to see if that can
laser. Yeah.
Of course. And there's other plays there. You got like your AUR, but that's more trucking. Still same technology, just more focused towards truck. So plenty of plays in this to play. I'm sure there's like one or two more that I'm forgetting right now, but I can look those up in just a little bit here, guys. So we'll see what happens with that.
Yeah, AUR is an interesting interesting little chart here, kind of trying to break out of this downtrend. It's been in for a bit.
Autonomous truck driving, and I'll tell you one thing, that just makes sense for me, man. I almost feel like that should be something like the motor highway safety administration should be pushing, right? Because how much stuff moves by trucks and how many truck accidents there is, right? And what it would be is, of course, these autonomous don't move as fast as people do. Why do trucks make mistakes? Why do a lot of people make mistakes? They're trying to push time and to save what, like maybe 5 minutes? And then they end up having an accident because of that. Autonomous can take a lot of that away because it's not going to push the limits. But hey, things to be thought about. And Toyota Waymo, Hyundai, Uber uses LiDAR. There's so many other ways to play this, right? Toyota invested big in QS for a reason. Keep looking for bigger companies investing in smaller companies. And that is one of the easiest plays to kind of catch one of these smaller names to get on a big run, right? Is when they start to get mentions from big names.
Oof. Yeah, someone mentioning GME. I made this tweet yesterday. I'm like, listen, we're in the middle of a meme stock ripper, and GME just can't get it going. It's over, boys. This thing's, I mean, it just doesn't get, you get KSS. This is one of like the weirdest meme stocks out there. You get this guy ripping. You get BlackBerry was moving for a bit there. Nice gap up here, just kind of gave it all back. But then GME gaps down on earnings and just can't break out. It's over, boys. No one cared. It's going to zero.
Well, unfortunately, somehow it won't go to zero, Michael, because this thing should have been zero 10 years ago. But
it'll have its Bitcoin. It will someday. It'll go down to trade to like the price of its Bitcoin at some point. Because
yeah, I think that's what I'm with you on that. It's just gonna be an MSTR, but a really bad one. A really bad one at this point. Just like AMC came eventually all the way back down. And
well, this is just wild. Like this chart
anytime soon.
Because you can chart free float. This is one of the craziest charts out there.
Yeah.
It was
oh man,
right here, 58 million shares all the way up to 500 million shares. So if you own 10% of AMC right here and you didn't do anything, you own 1% of AMC right here. That's how much they've diluted their shareholders. And same with GameStop. These dilution charts are just nuts. You can just see massive dilution came in right here. It's kind of the same thing. So 200,000 shares or 200 million shares right here to 400 million. So not as bad, but if you own 10% of GameStop here, you own 5% here.
Just come to our theaters and we'll give you a show and you can watch our earnings dilute you to hell. That's what AMC was doing to people.
It's crazy.
Good Lord. Yeah. And the worst part is acting like your friend. That's the one that gets me mad, man. I hate when companies do that, man. You're destroying your investors, yet you're calling them your friend.
Yes, you're playing into the whole ape thing. You're playing into their delusional conspiracy theory just to fleece them, right?
Just to fleece them, right? Just to be like, okay, well, you guys want to jump on this cult-like story? Well, I'll feed you it even more. That's just horrible.
Well, it's this. Some people still believe. Not only that, do some people believe if you want to go crazy,
the hedgies are still short.
Oh yeah. But if they were short, 1,000% of the company a couple of years ago, they're just short a little bit now. But yes, if you are ever thinking that you've lost your mind, I say it all the time, go to Twitter, type in $ BBBYQ.
It's
They are
coming back.
still,
Coming back.
I'm looking at it right now. There's still an active theme and stream of people going. They're updating like a court doc they saw somewhere, and they said, "Oh, if you read this court doc, it's going to tell us like, bros, the company's been gone for years. You get nothing. Like, claim that on your taxes. You get to write off a certain percent on your taxes for the next ages, and just move on."
Hey,
On to the
all
next one.
right. Let's go to some setups here. We got about a minute or two before the open here. Stocks on the watch. I'll just call out names on the radar for me. SPY's coming back. That's a good sign. So
Yeah.
I'll be watching heavy tech. Heavy tech today. I think tech's getting really good mentions. That AI mention could really get things going. More and more China names. Keep your eyes on that. Also, a way to look at this. I actually really think that's an interesting play in China now to get ahead of the China deal. By the time we get the deal, I think these stocks will be higher and the price will be already priced in. And that's the hard part, right? When you can get those moments where the market can price it in. I think at this point, it's almost a given that there's going to be a China deal. It's more what are the particulars and how nice does Trump play? That's really all it is. Is he playing nice? Yes, he's playing nice. And so we'll see what happens here. Bell's about to come. APLD is another name that I'll just give you guys that's on the radar.
And one thing I just wanted to show here is this is always something I watch, right? So again, RSP is the equal weighted version of the S&P 500, and SPY is obviously the S&P 500. And the fact that we are up on the SPY and down on RSP just kind of shows what Mitch was saying there. This is the last 2 days, big cap tech was holding us back. Today, this is a big cap tech rally. So, focus on those names today because they're certainly in play, especially with the earnings that we had the last couple days.
There we go. Market's open. Let's get after it, traders. Let's go. Let's go.
So here's let's do a better job labeling PM. So here's the pre-market high. So let's see what happens when if and when we can get to that pre-market high, and then it's not really the pre-market low, but I think that's kind of the major. I'm going to call it the pre-market low because I think that's the major low we got to watch. That's our initial range we need to keep an eye on, and we need to remember, right? None of these are huge events, but they're pretty big events. So we need to make sure that we have S&P 500 global, and then we have new home sales. Again, none of these are big events. There's just a lot of them, and they're all coming up fairly soon.
Oh, yeah. Let's see what happens today, guys. Let's get after it. See what we can come up with in the action. Right out the gates, we'll be looking at certain names. Hims, still long on that one, man. What a ride yesterday on Hims. Looking to see if I probably cash it today out the open here, but it's dipping and looking good here. So we'll see what happens.
I had that same error with the bot again. So figure that one out.
What is going on?
This is me just kind of trying to be greedy, pushing it to the limit.
Only one way to find out.
I like to see where things break.
Yeah, you got to push it till it breaks and then find out. All right, guys. Seeing Hims recover there a little bit. That still looks good. I'm going to leave that one alone for the time being. I'm just going to be watching the market to find where the market action is right out the gates. Out the gates, about 9 of the sectors red out the gates here. Healthcare and communication services leading the action. So that tells me maybe T-Mobile out the gates here, right out the gates, doing really well. T-Mobile, look at that. Rip higher, about $4 or $5 there on the rip. So T-Mobile at TMUS. AT&T or maybe Verizon could get going off of this. So I might try to play Verizon off the sympathy here from T-Mobile's report. Let's see if we can play that and play a little sympathy move here. back up towards 43. It's at 42.90s. We'll see if it gets through that 43.
Yeah, what a move there.
Yeah, good report. They just have it. They really have it well. T-Mobile's done an absolute killer job in this space. They're definitely the leaders now, and they've pushed Verizon down. I mean, you look at the market cap, and T-Mobile's market cap around 266 versus Verizon's 180, and even AT&T higher than Verizon now. Verizon used to be the leader, and it's struggling.
And it was a great pickup for, I know, a lot of people who were interested kind of in just the dividend side of these stocks bought them when they were, 2023, 2024, because the dividends they were paying were insane.
Exactly.
And then it ended up doing really well, just, holding on to and getting paid while you do it. Again, if you can do it, that's a great way to live, where you're just, I know there's like whole communities out there of like dividend investing nerds that
short squeeze in DNA here, guys. DNA, short squeeze DNA.
That's
this
ripper.
is great. This is definitely an old SPAC that I know, and it was such retail loved. Definitely pushing right now and trying to break the 1450s. Strong move out the gates here today, about $1.
Ginkgo Bioworks. So
yeah. Genomic space.
That's what ARC is that?
LIDR, I think, is halted here. Yeah, I believe it's halted, guys.
EE Rando's talking about Bloomin' Energy.
Guys, Bloom Energy.
Want to keep an
eye
on.
Who's talking about that one since 24?
Nice gap up there. Is that a short float one, or
it's a storage energy name like FLNC? This is all about battery storage, like what was brought up by Elon mainly. And Elon kind of put it really to work in the investment space. Of course, in Twitter, he mentioned more and more how this is very important, not just a little bit. And if anyone's going to know insight right into that, it's going to be Elon. So he gave it out there, and ever since that, you've been seeing these stocks. They were already hot, and they just got more support. FLNC is another name. That one's pulling back today. But yeah, interesting names there.
All right. I think I am back up here. Yeah. So I don't know, just to update people on what's going on there quickly with the bot is it's just, it's not respecting gaps well. So it's not, for what I'm trying to do for my own things. So again, I'm just going back, I'm tweaking, trying to get it absolutely perfect before I get a big daddy account just playing with these 25K accounts while everything everything's working. But just quick walk around the market. We have the SPY, just nothing so far. Same with the Qs, a little bit better on the Qs, but just inside kind of this range. Remember, I drew this out here on the SPY. RSP is actually selling a little bit onto the open. So just note that the average large cap stock is not doing nearly as well as the big guys. IWM, the same thing, actually gapped down 0.5%. So this is very focused in this big cap tech rally. If we take a look at like Tesla, for example, just cracked right off the open. So this is one where I'll look for something like TSLL. And if this one can reverse later, maybe you take that shot. But then Google, which was the other big guy that reported earnings, that sold right off the bat. So this was the VWAP entry, right? The VWAP break. And now we're going to look to see if it can get down to this 191.42, which isn't crazy considering. It certainly is possible.
Yeah, Ion Q, big dip on the gates there. I don't know what that was about, but it had a big dip. It's recovering now, just mentioning it at least.
Oh, see that? And I am very close, Mitch, to your setup. So we're going to go through that. You're going to need a trading view account, but we're going to go get you all rigged up there where, undercut of the pre-market range and then back through. So this would have been your entry right here at 42.69 with a 42 kind of 25 initial stop there. And then we'll see ends up pushing through.
ETHU setting up for another push. We'll see if that can push today. KLAC recovering today. That's a semiconductor equipment stock that I'm looking at, guys, on a swing side of things that I think could recover.
Solana's interesting here too, just from this space where we broke out of this prior zone right here. We've come back to test it. So far, 2 little support pops here. So we need to check that one out to see if that's going to continue there. But I do like the look of Solana, and then with Solana will go a lot of these crazy meme coins. So pay attention to your fart with hats and all that kind of stuff.
Pulling back down AEO as that spiked yesterday. That was an interesting spike after hours, as it looked like some campaigns with an influencer were spiking things at AEO. I guess that influencer really drives the Generation Z and the new generation. So hey, AEO was up big, guys, off of that. DNA now almost 15 now, guys. So definitely a squeeze on that one. I talked about it at 1450. You're almost at 15 now. No pullback. I've been looking for this thing to pull back. It's not pulling back a single, like very little, just straight buy coming on that DNA. LIDR back open there, guys. It did open up on an up move, came down fast and went all the way down into the gap. So I'm actually liking this right here. Washed out a lot of buyers.
Yeah, just watching the market overall, just not
struggling along a little bit.
I think it might be right. We got 5 minutes until this guy. I don't know if we're going to wait all the way until 10. We certainly could, but yeah, we're waiting to S&P Global PMI. Again, these are 2-star numbers, so they're not crazy FOMC type or job claims or something, but could be waiting for that. And then again, new home sales. We had existing home sales yesterday, so I couldn't imagine new home sales going to be that big of a deal at all.
Nah, I don't think so. I'm watching NNE off the 37. It's breaking that again. It's not looking too bad. AMD got hot early and then pulled back now, back towards the VWAP almost. Would like to see like names like NVIDIA also do the same. Tesla's still red. Yeah, Tesla's still red there. NVIDIA having a nice little push. Apple pushed and pulled back to the VWAP. That's a nice setup there. LAZR just hit $4 again, or LIDR just hit $4 again. I'm looking for it to now start making a move back up now. Long here, and I'm going to risk right underneath that 4 here. Ooh, and look at that, 390s real quick here. So I'm going to put 87s. I can get cut out there at 87s. Already had to stop. Just went 200 shares here, out that quickly in the LIDR, right back down. Liquidity search coming on right now. So there's your liquidity search. You see it with the sizing too. So this is what I mean by liquidity search. So look at the volume that comes in here at the 375. So you don't think this was volume, a bigger buyer stepped up there and just waiting? That's exactly what he was doing there. 73, 74, 76, 75. Look at that amount of share size. That's like 30, 40,000 shares there, right? You only take that kind of shot if you're looking for it to come back to you and you're using a lower level, like maybe like a 360 as your risk right now on that 375. So you can see all that stacking of volume. And then another ad, 18,000 shares at 76. So at 75 and 76, seems like buyers are willing to step up here. Let's see if they get some pressure put on them to 360s. That's where I think a lot of the risk would be. But back above 4, they start to win, and they start to win fast, right? So we'll see what happens there. Boom, they stepped back in there. Now let's see if it gets back above 4. I'll let you guys know back above 4.
SPY still chopping. We got 2.5 minutes till that number, so maybe we'll get something happening there. So far, just again, absolutely nothing on the market. So if we kind of look at the overall heat map, we got some tech up, some tech down. Financials are doing well. Again, Tesla is really the thing that's weighing down this market overall. Tesla just crashing here.
DNA won't stop, guys. That thing's now 1522s. So
So I have, I'm watching Tesla really, really closely here, and that's 305, 37, 38. That's going to be the VWAP.
Tesla.
That's going to potentially be my trade through the VWAP. My Google, again, I already took some off the table here, just being tighter on some of these. And then if we get back over the 2-day VWAP, I'm going to be out on that. But on the test account, not going to lie, that little opening, I got to yell at my AI because that little opening faux pas had 2 days in a row has been costing me. So, but that's okay. I bought these as test accounts because I want to test them. So it's just the way it is. Once I figured out, that should help you guys as well. Bull. Yes, still own, just FYI, still own some bull, right, from this purple line right here. After it pulled back, after this big gap day, that's where I bought some. Looks good here. And then open tax mentioning. Is that going again? Oh, maybe. Right, through its pre-market high, through trying to get through. Oh, it is through yesterday's range. It's an interesting looking daily chart. I wonder if they come back and squeeze that guy again.
It's funny. I talked about it with Trader is going to be joining us just a little bit later today. We were talking early morning, and he brought up open, and I was like, "Yeah, it looks prime off the 9 EMA again. Could get another little run. I don't know if it's going to go all the way back there, but in the long run, I actually believe in open. I don't think it's straight trash, guys. I actually think this could be a competitor to Zillow in the long run. The way they do things, it's cheaper than Zillow, so." I don't know. This is not a bad one to think about long term also. I would just say. Look into the story. Ooh, big cut down MSTR. That's going to cut some Bitcoin probably out. Mara still heavy.
Yeah, Bitcoin. Look at the intraday chart. Still holding on here.
Yeah.
Interesting.
I mean, that's a pretty good cut down from 415 now to 407.
Yeah, and again, we just more evidence that these names, these kind of Maras and all that, they are not participating as much on the way down, and they're getting cracked. Oh, Hut's holding, yeah. Just be careful.
Hut looks interesting for the short side. Just looks like a head and shoulders pattern, waiting to break down back towards 20. So,
but with all these, for me personally, with all these leveraged Bitcoin plays, I'm just not interested in the mining space anymore. They've just been proving over and over and over again that we're not going to go up when the market goes up or when Bitcoin goes up. Right? Bitcoin's at all-time high. Mara is in a 80% drawdown. Right? So they're not going up when the Bitcoin's going up, but when Bitcoin stops going up, they're tanking. So I guess, flip it on its head, if you are bearish Bitcoin for whatever reason, these seem like the best guys to attack because they're getting killed every time Bitcoin. And again, Bitcoin's not down today, just hasn't moved yet, and they're still getting kind of hit. It's down 0.1%.
Guys. NNE ripping there, guys. I wanted this at 37 today. Wasn't able to get it on the pullback there. It went to 37.05. Got a little picky, didn't go for it. It's going to 38. Starting to break daily pattern. Looks good. That could help SMR eventually recover and go higher. SMR starting to recover. Looks not too bad there.
Yeah, the Dow is holding near yesterday's low. Again, this is going to be pretty heavily influenced by UNH. It's a very large component to the Dow. So every time UNH gets clapped, you get this underperformance in the Dow. But Q's doing great, up at all-time highs or near all-time highs right here. SPY at all-time highs. So we just need Tesla to play.
LIDR back through 4.
So you see no green arrow yet for Tesla just because it's gotten to the VWAP a couple times, hasn't been able to close through it. That's the one thing that we wait for here. We had that initial number, that S&P composite whatever, and you can see exactly what happened when it was done. We're now hitting new high of day, new pre-market high. We're ripping. Now we just need new home sales not to do anything. Again, we had existing home sales yesterday, so I don't think new home sales is really going to matter that much. But if you want to watch your ITB, you can go right ahead. Again, it did a little movement after that number came out yesterday, but right now that we're up at new highs on this guy, That's all I think we care about.
LIDR
Boom.
now pushing back towards that 440s. Really good look through that 4 again. I hesitated a little bit. It's already gone 40 cents, so I'm going to leave it alone. But that person that was buying in the 376 and 378s, they nailed it, man. They went right back towards 372s. It's right back through this 430s. They had big sizing. I'm sure they're already selling into the move. Good move there on someone if they nailed it.
Yeah, I'm just looking around here, and most things I own are ripping as well. So good day for the swing side of things. And yeah, to Rando's comment, that's the scary part about automated trading, is if it completely malfunctions. Well, once you get it nailed in, it won't anymore. Also, one of the main benefits is that's why you sit here, right? I think a lot of people have an idea of, I'm going to just go take off and just not monitor the bot at all. But it's why I'm, even though I'm a systematic trader, at least for the first hour a day, I'm always completely zoomed in and ready to go here, because if something happens, I'm just here to exit. And again, that's why I'm trading in these eval accounts for this until everything is buttoned up tight, nailed in, good to go. And then we'll go and start to, I'm going to buy the big guy. I'm going to buy the 200K once I know everything is working flawlessly. Open is up 18%. Yeah, they're going after these guys. What's the AEO? That was the meme stock du jour today.
That's how I found DNA.
VWAP here.
That's how I found DNA, guys. It's part of that list that we talked about. It was leading that list that I made yesterday. It's now 1548. Like, you know what I mean? It's up $1. 10% since we brought it up.
This, these patterns take a long time to play out. I don't know anything about this company, but more and more I'm seeing this. You get the complete just destruction of like this down 99%. But the ones that survive and start putting in these low bases and break out, they've been working okay. And they've been working okay ever since ARK, funny enough, did the same kind of pattern, right? Just complete and utter destruction here on ARK, down 80%. And then instead of trying to catch the bottom, you wait for this base to go. And you go from there. One of these stocks that I have in my long-term account is this Outlet, just because I've given them so much money. So much money I've given this company. And it did the same thing, right? Completely destruction from SPAC, down 99%. And then just based for like 2-3 years, and now they're breaking out of it. These turnaround stories are starting to interest me. So this is something I'm looking for more and more. Of my kind of discretionary trading is just can it cop around.
The SPAC's getting you?
Maybe. I don't like them when they de-SPAC'd, but now that they're down 99%.
Now is when you go shopping.
Yeah.
When everybody forgot about them. The forgotten few that stuck around. Right.
And I'm working on a scan for them now because this is just recently has been working really well.
Really well.
Well,
and why? Another thing is money's coming back for the markets. Like the venture funds are willing to spend again. All that type. What does it do? It also leaves a runway for these companies, right?
I think a lot of it's too is right. Like the best argument I can ever make for owning Bitcoin, as someone who owns a bunch of Bitcoin, is they can't kill it. They tried to kill it a couple times and just kept coming back. So kind of my thought on this anyway is that if you find all of these SPACs, a lot of them died, like tons of them just went completely under. And some of them are, they had to reverse split 1,000 times. But if you find the ones that didn't die and they were able to just like hold on through 2022, 3, 4, and then put in this low base, which if you look at Stan Weinstein's work about stage 1 accumulations, that's pretty much this right here. So that if you just find like the diamond in the rough, the guy who didn't have to dilute shareholders to oblivion, the ones that didn't die, and then you get these breakouts, and I'm not saying this thing's going back to like $100 a share, but if it goes to like, I don't know, 20, right? That's a 200% gain. And same with a lot of these, like QS didn't look quite the same, but you just want stocks that kind of look like this, that have found a low for a number of years and are starting to break out now. And that just seems to be in this market anyway, one of these fleeting patterns that, if we're into another 2-3 year bull market, then there's not going to be many of these patterns anymore. But while there is, make hay while the sun shines, right?
All right, seeing Apple as a potential buy here. I'm going to go get a starter here, and I'm going to look for another add towards 214. Looking for Apple to make a move is on the playbook, so not going to avoid it here. I like the look on the 9 EMA on the 5-minute pullback here. We'll look to see if we start to come back here to the upside. Also got a swing on, of course, in APLD, and also got it on at HIMS. And I was up like 9% on HIMS. With only like 15 shares left now as I cashed them yesterday. But man, that's working for me. And I just took some APLD and that's looking good right out the gates there.
Yeah, APLD looking good. Again, the SPY so far, we're watching this closely. We have our last minute, which is our last number, which is our least important number in a few minutes. But so far we're holding. I want to see this pre-market high break and then us hold around here as well. So
why am I getting a buying power rejection?
The idea is that we are pulling back if we hold this level right here and then bounce from there. That's just a perfect kind of breakout, retest, and then continuation. So yeah. So here's a question. Can we trade on the daily time frame? I'm in Australia, so I can't day trade. Well, you should go to tradethepool.com and look, because we just opened up swing accounts. So yes, you can. Mitch is doing some swing trade now. So
yeah,
long story short, absolutely you can trade on the swing time frame there. So you could enter a bunch of orders, stop losses, all that while you're sleeping, and wake up the next morning. I know a lot of Australian traders. There seems to be a big systematic trading community in Australia, and I think it's because of the time zone where, right, these guys just have to kind of set up. Hey, I want to buy this stock if it hits that price, or buy that stock if it hits that price, and they set up all their orders and they go to bed.
Let it go.
A lot of them, I think, do a lot better than U.S. traders that are there micromanaging their trades all day long, because they have to plan out the whole, this is the level I want to get in at, here's the target, here's a stop loss, and they just set all that up and they go to bed. A lot of massive community from as a systematic trader who's kind of public facing. I get them all the time from Australia. Again, you make it work. If you really want to trade, you make it work.
That's for sure there, guys. Seeing some downside come in a little bit there. We'll see what happens if we can get a little bit more push. Watching for these names to continue to run. AMD could start to push. That will help the market. Looking here to see if NVIDIA is going to make a move back up. Amazon kind of pushing strong. Look at Amazon. This is the, you meet with Trump run.
Yeah.
Jeff Bezos was meeting with Trump, and so they were already like, yeah, let's go buy Amazon. Remember we were talking Amazon down here at 200s, guys. This has continued to run. It's now up 14%. That's why I also bring up these big quality names and then going after them on charts, because the truth is they're names you want to be in. And this run has been a really nice run there in Amazon. So definitely not a bad one.
Yeah. So yeah, just to follow up. So I can place a trade just before the close, which is early morning for us. Then I go about, And again, you can swing trades. You can hold trades multiple days through in our swing trading account. So
we have two different programs too, right? The flexible one is unlimited timing. So if you need to, let's say, just take care of some things and you're not going to be able to trade this week, well, then just keep trading when you want to trade. I think
or more importantly, if there's no setups for you to trade, you don't. That's the one thing I love about these new plans is that quite often, if there's no trades that day, then you kind of felt the need with the time limited plans in order to trade, but you don't have to do that anymore, right? So go nuts. Just quick, some updates, right? So Google, again, I exited some right here. I'm looking for either a close below or above VWAP or the 2-day VWAP. So that one's working out well. And then Tesla, we ended up actually getting an entry on this candle right here, just like I was looking for, is a close over the VWAP with a stop below the day. So I'm watching that one. May take a little bit off early if we kind of get caught up inside this area right here. But as soon as Tesla stopped going down, that's when the market started to rally. So we broke the pre-market high. We've come back. We've had a successful test of VWAP so far. We're holding that. We have, again, this very small number in 2 minutes. But like I talk about all the time, it's not that the number matters. It's that there's a lot of systems that are just designed to say, start trading when all your numbers are out of the way. So in that 2 minute or a minute and a half or so, when that's over, that's it for the day, right? So there's nothing until the close. And then I was just over here. I was actually looking at the earnings calendar. There's not a lot tonight either. So the market seems free to kind of do what it wants to do. After the close, Intel was the biggest one. I thought that was interesting, but who really cares about Intel? Poor Intel. And then other than that, there's nothing. Intel and DEC. Those are the only two names I actually
Shoes outlook,
recognized.
consumer outlook, Coca-Cola. That's not a bad one to think about just because Pepsi had a really good report. So I think Coke could, push off on that. Intel, that's just Intel. Like I wouldn't even talk about it.
Yeah, poor Intel. You used to be the king, and now no one even cares when you report earnings. But so I was just giving that whole speech about how I'm looking for these low bases, and they resolve higher potentially. Maybe you need to see this breakout. You need to see the breakout stick, but that's been working. So I don't know. Maybe I'll pick some up if we end up going here about Intel. IBM, I think, reported already today. Yeah, and they did not wow. So they beat top and bottom and then gap down, have been selling pretty dramatically all morning here on IBM. You can see how much that affects the market because no one really cares about IBM either. But as we continue to sell there, that becomes kind of interesting. So I'm actually going to add this one to the list for a break above VWAP later on in the day.
It's not a bad one. IBM, man. They were sleeping for so long.
Yeah, I don't know what they...
Wake up, market.
Well, we just had home sales come out. So is that going to free us up for the move now? Because everything under this we don't really care about.
Industrials pushed off of that. That went green and went green fast. Caterpillar back up. Like Picard. Remember I talked about Picard, guys. I have a feeling I'm going to look back and we're going to fill that gap there. I'll keep watching that. XLI is another way, right? Just looking at the XLI, new high XLI.
Yeah, I was just looking there at the XHB, which is the home builder sector, starting to rally ever since that news came out. Again, it's not like it's the biggest sector in the world, but it's just a good look. If people are buying homes, that's just right. I don't care if you're buying shoes, right? I care if you're buying homes. So if that came in good and we're starting to get a little bit of a bounce there, that was actually one of the lagging sectors today that was down. So if that starts to recover, it'll make some difference. It won't be huge, like energy, right? That's 3% of the market. But we pulled back between those. It's funny. We had the first number that caused a rally, and then we drifted lower between those two numbers. And then the second number came out, and it looks like we're potentially rallying here again. So
just added on HIMS on the swing, guys. So willing to take the shot off the 56 now, and it just quickly recovered. So that's exactly what I went off of. I said that was the support. I'm going to let it undercut it one more time. As soon as it undercut it, took the ad. Now I want to see 56 hold, and my average is actually 54.49. So I'm still way away from here. Might as well just take the shot because I have such small piece. This piece isn't going to make me too much, even if it goes another $10. So I'll double up here and I'll go break even on the rest. We'll see what happens.
It's a good way to do it, right?
I've already paid myself, right? I took off 3/4 of the position. So now it's time to have some fun.
Trading around a core. You'll see a lot of these William O'Neill disciple guys talk about that all the time. Something he did a lot of, right? If he liked XYZ company, he built a core position. Maybe that core position was like $50,000 worth, and then he would take roughly 1/5 of that, or $10,000, and play around. So as it moved higher, he would sell up to $10,000 worth, and as it pulled lower, he would buy more, as his way to kind of play inside while keeping that kind of core position on. And his way to make a little bit of money when he was right, but he also talked about it a lot as an engagement tool. So you don't just get disinterested like you were. You were saying, hey, I got 15,000 or 15 shares. Who cares? And then that kind of puts you in a bad mindset where if you're actively trading around the security, it helps kind of keep that mindset of looking at what you're doing going. RSP just turned positive on that news. So we're seeing a breakout here now in the every stock. So we're kind of reversing where we have the Qs are selling, and then we have the SPY that's holding up and rallying a bit. So big cap tech is now holding us back. It's no longer leading us. So we got to keep that in mind, change your focus if you need to there.
Yeah, I mean, they're not looking bad. It's Google that's dragging us down right now. I wouldn't even say it's Tesla. I'd say it's Google that's holding us back here. Nvidia's right there. It's not too far down. Nvidia is the one that's like up support right now, so I'd watch that one as a big name. Google's on the pullback, but it had a huge gap up, right? I mean, we can kind of expect that. Amazon's holding us up, right? That's helping things. So if that turns around, that could be a negative one. Apple's the one that I'm in right now that I'm just looking for a drive to show us that, yeah, the big boys are going to carry us today. It's right there on the 214 recovery. That's what I'm essentially playing. Let's see what happens.
Well, and the fact that we are seeing this divergence with Qs down and SPY up means that if the largest sector out there of tech starts to participate, we could have a really good move as well, right? So that's why you always want to look at the lagging sector, is you want to look at it and say, okay, what do I think if Tesla starts to recover a little bit, but also IBM starts to recover, these two big names, that's just going to be more fuel for the fire, right? Because if we're able to hold on when they're not participating, so if Apple starts bouncing here, names like this, they keep going, then it's just going to show the whole market. Because I think it's more likely that big cap tech participates in a rally than big cap tech pulls everything down, which isn't something that happens too much. So
yeah, and the way that I feel is that we've already had this kind of lull in big caps, so it went to the dash for trash. A lot of times what I think happens there, dash for trash hits, and all of a sudden they just pull from those trashy plays back to the quality, right? There's always like the shift, right? It goes from like growth, all of a sudden value really quickly, and then all of a sudden it even goes further down into like more speculative plays. Once those speculative plays stop going up as fast, you'll start to see a shift go back to what? Back to quality, right? So I think we watch for that shift.
We say it all the time, right? Rotation's the lifeblood of the bull market. If you're in a bull market and you made a crap ton of money in open, say open was, you're a hedge fund and you had this small position in open that you probably forgot about, and you wake up and it's now moved your entire portfolio up a couple percentage because it's been moving. Great. You sell some, buy some Apple with it, right? So it's quite often how these things work, where they're constantly rotating. If the speculative part of their portfolio is getting too big, they trim that down and they build up into a more boring part, and vice versa. If the boring part gets too big, they sell some of that and they buy some speculation. So as these funds are rebalancing from place to place, great, then that's what ends up making those rotations. And again, you got to do the rotation.
Yeah. Looking around, guys, we'll see if we start to get
Apple,
some
nice
actual pop there.
Nice bounce there in Apple.
Yeah, it's a name that I'm watching for. Taxing KSS up 7%. Not a bad name to look at. A lot of people were betting on this as also a short flyer. And of course, I mean, this does have a high short interest. And of course, Kramer said that the hedges needed to cover this. Well, now it might make sense for this to actually. Yesterday it did the down move. Now it would go up, right?
Yeah, 49.3% short. I'm just looking over here. That is wild.
I mean, they see it like a Macy's. They see it as a Bed Bath and Beyond story where they give so much discounts that it's just crap quality. And I know that because I go to the store, like if I return Amazon stuff and they give me $5 just for going to the store. They're just like, here, go buy something. And I'm like, well, this thing costs $10. All right, I guess I'm getting a 50% coupon. I'll buy something. I mean, I guess.
It's yeah, and it's such a hard game. This is why shorting is such a hard game, because I think a lot of people they watch The Big Short and they get enamored and all this stuff. It's like those people are probably right. I've never been to the store. I don't think we have in Canada, but just by looking at the chart, this is probably going to go bankrupt. But after you've seen what can happen when Reddit gets a hold of something, it's like you're doing this to make 100%. That's the most you could ever make shorting, unless you're doing some crazy swap, nonsense. So that's why I'll just never get it, because you can only ever make 100%. For day trading, it's great. For short-term swing trading, it's great. But for long-term trading, you're risking getting completely blown out for a potential 100% gain. Whereas, people who have bought these dips in cores, if you've nailed the dip anywhere close, you've gotten multiple 100% gains. It's just, you're taking on a lot of risk for that kind of thing. If I was a shorter, I think I'd have to be like a Muddy Waters type, where you're just trying to find like pure scams. Like you're not just trying to bet that bad companies go under, but you're trying to find companies like Luck and Coffee and things like that that are just legit scams.
Yeah.
It's the only way I think you can stand, right?
Yeah, that's what you need to be doing though. And it's earlier calls like I've done on like Beyond Meat, right? At the top, like early on, right? And that's when you make your short calls that seem to make sense, because if I made a call around 200 break, now the stock's at here, I would already be out if I was short.
Yeah, I was about to say, if you're shorting Beyond Meat now because it's a crappy company,
exactly,
the risk reward just ain't there, right? It could, yes, you could make 100% return if they go bankrupt, or a bunch of jokers on Reddit could talk about it and you could lose 300%. It just doesn't.
That's just the way it works, man. LIDR trying to come back through 4. Buyers keep stepping up at 4 here. Let's see if it really wants to go now. I mean, I've been trying to play this thing. I've been in and out of it. Let's see if I can get it now. I'm going to try to risk on the 380s here. So just took a little bit there, 300 shares. Let's see if this can hit 4 and really start going. Apple has been in the green and red 2 or 3 times. It just went back to 214, which is the exact move I wanted to see hold. So now Apple's looking great there. Now I can let that start to work. And I can even bring the stop into the green a little bit. That's looking good on Apple. So now let me go focus on LIDR, see what happens here. It's already hitting back into the 380s. Just doesn't seem to want to get going there. Keeps finding buyers at the 76 level, but that level might give up now. I just put a stop there at 74. I'll let you guys know. Probably going to get hit. I'm putting myself out there, and that's exactly what happens. Boom. Big size there, 79, 20,000 shares. Someone's building a huge position here around the 376 to 380s, but it won't break 4. So something's telling me that just be careful there. There might be bigger size, overhead supply, maybe someone that's had this for a long time trying to get out at 4 and keeps hitting the out button, right? Has a program to get them out at 4 because there's some big size there, like 20,000 shares, 379, 382. But then immediately it slows down the tape. So I think this is more one seller trying to take out a big piece of their LIDR. There's Apple at least sending. So, hey, we can't get them all. At least Apple looking pretty good.
Yeah, nice push up there. Someone in the chat mentioning Palantir. Looks all right. 3-day pullback and nice bounce yesterday. Close to all-time highs. Looks good. Not really participating in the move today yet anyway. So this could just be a simple opening range play. Got some resistance here at 154. Google, I think that has, so that triggered out. So one of those I shouldn't have taken any early, but we're at the 2-day VWAP now. So I'm going to watch this one closely just to see, right? Do we rebound through the 2-day VWAP? Is this where we hold? because that's what I think needs to happen in order for the SPY to hold on. We're bleeding back into the range. The Q's at lows. So completely flipped the script today, where it is the big cap tech that's weighing us down. When this morning we were talking about, it was the opposite, right? So this is what we've seen the last couple of days, that the rest of the market's rallying and big cap tech's holding us back. Today it looked like that was going to flip, where big cap tech was up way more, and that's reverse, where the SPY is holding on here but doing a little bit of selling. However, the Qs are at new lows. So the 2-day view app on that is 562.50, and we'll see what happens there.
DNA back at the view app looks interesting. 3 cuts down, trying to create that bullish engulfing candle look right back above the view app. I'm keeping an eye on it. We'll see what happens there.
So yeah, eyes on SPYs here. If you go to MAGS, right, the Mag 7 ETF, that's cranking to new lows, looking a lot like the Qs. So my Google did well, but my Tesla not so much yet. Right, they're not down a lot on it, but it's pulling in here. And again, no numbers, no real earnings we care about or anything like that. So the market's pretty much able just to move on its own kind of accord here, which may mean shop, but I don't think we really have anything tomorrow we care about either. Durable goods will move it a bit, but nothing crazy.
Looking to see if I can get a 450 in a recovery here for DNA. We'll let you go if I do get in there.
Yeah, I'm just looking across the board. Again, a little bit of selling. It's not crazy, but we are just back into the range here as well, right? ALB, someone. Oh, yeah, ALB is pushing higher here.
Don't talk about them. They're dead to me now.
Chemicals, specialty chemicals, sure.
Dude, I told you this one. This is lithium. SQM. Look at SQM.
That's the Brazilian one, SQM. Yeah,
Chile. I've been talking about this since 33. I'm telling you. This is gonna be one of those that I'm gonna be upset about. Remember, I was talking about this back on Wednesday last week before I left, and was looking at this, and I was like, man, I've been looking at this at 36. It looked good. It looked good at 39. Now it's 42. Really quickly, from 30 to 42. That's not a bad move already. And don't forget, this stock has been in a downtrend for years. Now starting to turn around. This is why I know that there's some people say, oh, but don't bottom fish, don't bottom feed. And this is exactly that bottom feed that looks awesome. So you just got to know when the trends are changing and what themes and like conversations are being talked about in the market. All right, there's a nice look there for DNA there. I'm trying to grab an entry here in DNA. There it goes. I got the entry there. I got the liquidity scare down towards like 1430s there. So now we'll look for the recovery. We'll see if we get it back up there. And that's right here. I'll show you guys that DNA pullback here. You see that little wick? Was looking for it instead of being scared about it. As soon as it started to wick through that 1450, I was like, okay, just start working your way back. Boom, I'm in. Now I know my out below that 1430s, and I'll take the shot.
Yeah, the SPY just needs to dig in a bit. And again, we're just in the middle of that pre-market range that I drew this morning. So although, I don't like when you have that kind of fake breakout and then break down, that looks bearish to me. We haven't really moved too much that we have to worry about. So we just kind of keep half an eye on it here. And if it digs in, great. If not, again, we know the sectors that are underperforming. That's our big cap tech. And then what's doing well, it's a lot of the, these short squeeze kind of crazier type names. But we have open up a bunch today. We had Kohl's going. We had AEO going. And then I'm kind of thinking about and looking at GameStop, which is down today and selling. When the meme stock era that we're in comes to an end, seems like they perk up their little heads a couple times, every now and then and look around, and maybe 2-3 times a year you get this kind of meme stock excitement, and then they all kind of die back off. They move on to other things. So GameStop
SPY
might be
keeps
one
selling
that
off. Be
goes.
careful out there, guys. SPY is just holding us back, guys. I don't want to go. It doesn't want to go.
Yeah, we just went red on the SPY. RSP is not quite red, so we're getting some good outperformance again, showing us it is big cap tech. That is what's weighing us down.
Yeah, even Apple that was looking good right now is coming back fast right here. So you just got to be careful, looking for it to drive, but got to be smart here.
And again, the perfect, beautiful irony would be if the SPY broke the pre-market high and then sold, and then came down to the pre-market low and then broke that and rallied. That would just, right? You want to give everybody a bad day. That's how you do it. That's what the SPY does quite frequently. So definitely just keep that in mind and say, hey, there's a good chance here that we could just be chopping. That could be it. We could be waiting, like you mentioned, is for the China deal, right? So
yeah, I'm looking for at least I'm still calling it here. I'm still calling the shot. I got out of APLD there for like a little tiny haircut there at the 1090s. I'm right back in it. It just looks good here, and this is how APLD has a tendency of doing it. You just got to be able to risk towards the bottom. So I'll risk towards like the 1080s right now, looking for this to kind of really make the move on the long-term outlook. HIMS is just still playing around, right around that 56. Started to climb back, then undercut multiple times. Apple just watching for the move back to 215. You see how it's now done this kind of like move right around the VWAP. Now we need to start seeing it claim VWAP and hold there if we're really going to get a move. So it's an interesting day. I think MSTR is still looking ugly. So just want to keep framing that one. But hey, not a bad day in certain stocks. You just got to be in the right areas right now. And I think that's the important thing, is making sure that you're in areas that are hot. That BE, good mention earlier in the chat. I think it was Rando that mentioned it, or it was maybe Talk. But look at that BE chart now, guys. So Bloom Energy doing really well. AUR, we talked about it. It can make the move off the name and the mention. This man. Dude, why didn't I just buy this thing, man? I brought this thing up to you guys at 6. At 6. No one was talking to you guys about you at 6. And how did I do this? I talked about themes. I talked about MP. And then some guy randomly on Twitter goes, yo, Mitch, check out you. And I didn't take his word for it. I did my research, and I was like, yeah, that's actually perfect stock for this. So thank you, my friend. I'll go looking at it. And I even gave him the gift, like eyes open, like, oh, thank you. So that's how we can help each other, guys. Yeah,
there's a lot of weird names that you might not be thinking about until someone mentions them. Speaking of,
the key is it's a theme, right? It's a theme. It's not you're not buying the name, you're buying the theme, right? Just like you didn't need to believe in NNE, you just needed to believe in nuclear energy, right? And things like that can really help you guys. Just being in the right themes can help you, right? Like, if you bought a basket when Tesla was first mentioning that, like, data storage, this was like around 25, right? Even if you missed this first move, you're still higher now, right? And there's a reason why. Investors are looking for themes to jump on.
Yep.
And if they can jump on a theme, it helps them because there's multiple stocks in a theme, not just one stock. It's not a one stock catalyst. It's an industry-wide catalyst.
And someone talking about FCX. Got the chart up here.
Hopper.
Interesting. Did that push down this morning? Nice little kind of dramatic sell-off. And ever since then, we talk about all the time trying to spot like programmable buying. And this is what, especially this area right here, this looks like a buy program to me. Where they've just been buying this right up into the 2-day VWAP, and then we drop. So this is an interesting one. I like the daily if it kind of closes like this, where it put this nice bottoming tail after undercutting this low right here. The fact that it did this topping tail yesterday on earnings means there's probably a lot of shorts trapped inside this tail. So as it grinds higher, it's kind of got fuel for the fire to move.
Yeah, I agree, Talk. I need to stay with my convictions sometimes. Yeah, that's part of it, man. And I think that's part of doing like shows and stuff that I just got to get around, right? It's just part of the game, right? And it's part of that is also I can't like focus on my positions as much as I try to cover the entire market for us here. And that's going to be a part of the game, right? If not, then I would just be focused on my plays. You'd only hear about my plays. And I don't think that would be the best value to give you guys back. But that's just part of the game. But I agree with you, Talk, on saying that sometimes I just need to stay with the conviction names that I have. You're completely right on that comment.
Yeah, there's going to be the 80-20 principle, the Pareto principle, and pretty much all things, right? You're going to look back at your career, and for swing trading and kind of long-term investing, there's going to be a handful of trades that hopefully made you very, very wealthy. We talk about all the time when it comes to trend trading is that they have a very low win rate, but every now and then they just crack one out of the park. And that makes up for all the losses and a big chunk of change. Now, day trading, I think that's a different boat where you've got this end of day that you have to trade on. So that's more of a take many, many, many small bets and then, try to get some sort of an average on those. But when it comes to, more longer term ones, you just have to got to keep going at a couple of things that you really believe in, right? And you got 10 grand into them, you get one that's a 20 bagger and that turns to 200 grand. You go, holy smokes, that's something that's a small amount of money to something that, hey, paying off part of your house or crazy things. And when I look back, it's a couple of those. It's a couple of big hits that I took that were plus like 6-figure plus per trades that kind of got to the point where it made me comfortable.
Yeah, I think it's part of the game, especially with the swing trading. I think that's where you can catch these moves, right, on the rides. The key is also it's like how you go about it too, right? Are you a half seller? Are you a quarter sell? Do you keep a piece for the bigger runs? But all right, guys, let's see what happens with this market. We've been chopping back and forth. We just bounced on the SPY near open. I got to look at the price, but it seems like it was really close to it. Yeah, 60. Yeah, right near the open. That's a good sign, right? You didn't undercut the open. So now let's see if the SPY can rally back to resistance and break it.
Yeah, it's got to get, if it can quickly retake that pre-market high, that's good. That means it was just a little bit of an undercut and then a pop through.
Oh.
That's, again, one way to take a look at that. It could be that we've just broke the range and now we've just re-entered the range and we're chilling. So for me, it's these lows right here. We now have two pretty much equal lows at pretty much 634 even. So above 634, I think we're probably bullish on the day. Below 634, probably time to go. And again, you got to remember, we did this yesterday. Like yesterday, we undercut in the morning and then we just ripped all day long. From lows to highs yesterday, it was almost a 1% move and then pretty much in a straight line. So, a rest day, I don't think it's a bad thing.
Yeah, leading the market now in the last 15 minutes from the open is technology and energy starting to push. So technology now starting to play into the rally could help us out here. Let's see if we can actually get some liftoff in names like Meta, Amazon. Amazon looks interesting. It's right back to the VWAP there. So if you feel like the market's going to go higher, opportunities there, right?
Yeah.
That's a good pullback. It's like a 50% retracement. So there's moves here. What I look for is the similar move that I traded in DNA here. So you see how there's 3 clicks on, maybe it even shows up on the 2, but 3 clicks below VWAP, right? On the 3rd click where we're hitting it right now, this 231, look for a swooshing action on the bid side on the tape, and then look for it to immediately come back. It's like a wick that washes out the logs. Same thing happened on that DNA, right? Wicks that undercut and then come right back. Those are what you're looking for. You're looking for that price action, the liquidity search, right? That's what I think we could see right now on Amazon through this 231, and then it starts working back. We'll see what happens.
Yeah, what a day so far. And it's felt more eventful than it's really been, because we're pretty much right near the open price still, but we had that big rally and then a big sell-off, and again stuck back inside that range. But again, it could just be annoy both sides as much as you possibly can, then pick a direction and have that kind of later day type run, which is fine.
There you go. Nice pop there in DNA.
Nice. DNA. Oh yeah, getting back to view.
Pop.
Oh, is that halt?
Let's see.
That may have been halted.
They just got the halt.
It looks
the
like
quick pop. It went from 430s to 470s.
Oh no, we're open. Maybe.
Very slight trading there. I'm not seeing much come through on the tape. There it is trading. It is trading just very slightly. They got 1,300 shares there.
It must have gotten right to that halt price, and then
they slow it down right there. The algos know how to slow this thing down to take away the halts. There's an algo, I don't know what it is, but it's trained to slow down the halt. I don't know how it does it. I'm not smart enough. I'm not that big of a nerd.
Well, you'd sell before it, right? And that's probably what.
Like as soon as it gets like that one tick to that, it knows to sell some shares, throw some shares out there.
Yeah, and it could do it with like a iceberg order, right? So you'd never really see it.
Like
so it hucks out an iceberg and then gets some shares off the bat there, and it knows it, which makes sense, because if it does it right before the halt, they probably just don't want to hold that much. It's a way to lighten up before the halt, because there's a lot of people that try to punch in before a halt, hoping that they get a gap in their direction. So they're probably saying, okay, well, if I know a bunch of you guys are going to be punching in, I'm going to be punching out. But yeah, look at this thing go.
Yeah. And Amazon doing that setup here. Let's see if it does the move here. I'm in like 2 green trades, so I'm not going to push it and trade this one. But the setup's there, and I want you guys to be able to see it, right? So see what I talk about, right? So you see this 231 now starting to crack, right? You see what? 1 crack below VWAP, 2 cracks below VWAP, right? Now you're getting that wash attempt where people thought the support was right here, 231s. Now they're getting washed. I'm looking for that wick to recover back above the 231s. You see how it's wicky right now? Now you look for this to recover back towards the VWAP. And that creates what? A bullish engulfing look off of a wick attempt. So the big part of this strategy is the psychology part of wash. Traders think they know the support, which is right around here. They're thinking that that's the support. It washes through, rejects it, washes them some more. Now you look for the reversal on the price action back to the upside. And so the patient traders wait for this move versus jumping on this one, right? So that's the one thing that I would say that the reason why it works. We've been trying to explain patterns more to traders that don't focus so much on the shape, focus more also on the psychology of how traders are trading during that shape.
Yeah. Oh, and that's at the end of the day, right? Technical patterns weren't made to be magic, right? It's not like a Head and Shoulders. Someone looked at it and said, oh, look at this magic thing that happens. It's just ways to describe where are the buyers and where are the sellers. Where do they exist at, right? A Head and Shoulders is just a change in trend. So yeah, always understand the psychology behind any of these patterns to see if it makes sense in the kind of the context that you're trading it at.
Yeah.
And you're not just trading it because, oh, a book told me that bull flags were good, so I'm going to trade bull flags, right?
Yeah. And finding things that combine, right? So like a pattern with price action on the time and sales, like you see, so you're combining variables. That's why, and just to mention, Talk said about like trade the story, right? On like that ALB. That's great. Now combine that with the technicals and the fundamentals, and then you can have that high conviction style play. That's where I've gotten to, guys. In my experience, I feel like that's what it's all about. It's combining those variables, finding those really high conviction plays so that your plays can come down, right? You don't have a high amount of plays, lower amount of plays, bigger shots taken, right? that's where I've come to. And if I really want to make, big outsized returns and, really kind of make an impactful change, that's where I think it is. It's traded less in really high quality conviction style plays.
Yeah, exactly. Yeah. And which is funny because that's a little bit opposite from the quant approach that I do, right? And it's the difference between the two, right?
Yeah, and you'll see it. You'll see it, right? There's two approaches, right, Michael, that I think I've seen win in the markets often. It's either the super very low like risk return. They're risking like 0.03%, making a 0.5 on the upside, or it's the guys that know how to manage risk and really trend ride, make like 562% on one trade, but lose 5% and 10% on the next three, right?
Yeah. Do you go deep or do you go wide? Those are the two ways, but you got to focus on one of those. Either a lot of small bets that have an edge to them, or you go deep and you just really put the gas on when you got one or two things that you really like the look
Natural
of.
gas numbers just came out. There you go, Boyle. Good mention there, Talk. Appreciate you, man.
Yeah. The Widowmaker.
The Widowmaker. You know it, my friend. If you guys don't know, they call Boyle the Widowmaker. And you can research a little why. Or just look at the chart. The chart will tell you it all.
It is such an insane asset where there doesn't seem to be any kind of trend that you could potentially play. It's just, right, it's up.
It's wild.
Couple percent one day, down couple percent another day. If you got really good, if you want it like a commodity to trade, that if you got really good at, you make a bunch of money. I think that would be nat gas, because it's got the volatility for you. You just got to be able to master it.
All right. Well, I know someone that trades volatility and trades them all. So we're gonna actually bring on Kevin Avery here, guys, from the green room. So hopefully he brings a little green with him. How we doing, Kevin? What's going on, man? How we doing?
Love that transition. I know somebody who trades volatility.
Hey,
yeah,
man.
we've been seeing it with the meme stocks, man. They've been absolutely crazy. And I see in the chat some guys in here are involved in the KSS and Open. Wow. What do you guys think about that?
Hey, man, it's how it is, man. And I talk about, you can trade every flavor of ice cream. You just got to know what flavor it's this week. So this is the flavor of ice cream this week, guys, which is trade high short interest, trade these high flyers. And I mean, KSS, when it moves well. If you look at the daily chart, when it pops, has a tendency of doing 2 to 3 green day moves. So this is also what you got to be looking at when you're looking at these plays. Start looking into them. At least KSS isn't going to disappear tomorrow. Even though it has a high short interest, we know it isn't going to disappear tomorrow, right? And that's why
I love how you're looking left to predict right. I mean, that's I love the technicals in that aspect. And you're looking at the daily candlesticks relative to the average one. I love doing that as well. Like what is the personality of this ticker? Because when we see these IPOs pop up, and they feel more like a gamble. I don't know if you guys trade the IPOs, but
I'm with you.
There's no chart. I mean, there's nothing to look at. We can't get an idea of, like you said, does this one put multiple green days in a row or not?
Yeah, I think that's important. And I always look at like the trend, right? When the stock does well, how often can it trend?
Yeah.
And like the one that I always point to, like in gold AU, is I love this name because when it does well, it trends. It breaks out to the upside. It does big waves, right? Big waves. And you can ride that big wave and just be the surfer, right? Just ride that big wave until it breaks.
So you understand that the personality of that ticker. There's some guys in chat too who like all they trade is Tesla or like certain names where they really are dialed in on this ticker, the movement, the price action of it.
All right,
it's easier to track
a little bit here. Some DNA. Let's cash a little bit today. I need to cash a little bit on this one. So I did this one as a high flyer today, my friend. DNA bought it down here. Going to sell a little bit here at the 1512s. Let's just sell some there at 1506, not to get pretty with it. And we'll try to ride this now to the high of the day break, right? Reason why I'm selling here, I always look at what I call trend line approaches, right? So the trend line just broke this right here. So I think it could come back to that level, which is around the VWAP. I'm willing to sell some here, look to see if it reloads and keeps going to the 16. We'll see what happens. APLD on the swing starting to look better for me. That's looking great here. My ad on HIMS, that 56 is starting to hold well. So I like this name, and we're ready for some more green. The green team is here also, Kevin.
Yeah.
So tell us a little bit more about yourself, Kevin. What do you like to trade? What do you look at? And if you want to share different charts or something like that, hey, feel free, man. It's good to have you a part of the show. Getting you a lot of love in the chat. There it is. The legend.
I appreciate you guys.
The legend,
nice to meet you, Michael. Officially.
Nice to meet you.
Yeah. So, I mean, I focus on the inefficiencies in the market. That's essentially what I look for and what the team looks for. One of the trades that and what I teach is focusing on, I was telling them just before I hopped over here, is as you progress in your trading journey, I mean, some people stick to one trading edge, but as you progress, I think it's important to be able to trade like multiple edges. So not just the descending triangle, not just bear flag, bull flag, head and shoulders, knees and toes, but focus on pretty much everything. I mean, some hands may be 7-2 offsuit, and I won't take that. But if you're only, I mean, you can only trade the pocket pair ace setups, and those may deserve a little bit more risk. But there are other good setups as well. Would you agree with that?
Oh yeah, and I know Michael would jump in here. He's eager.
Well, and as a quant, right? So I run systems. I couldn't agree more, because if you take any system with edge, and then you test any other system with edge in a portfolio style, it's 100% of the time you get increased returns, reduced drawdowns, because when edge A is not performing, then edge B probably will be most of the time. So yeah, diversification across securities, not really a fan. Diversification across strategies, I think, is the ticket. And I'm to the point where, I'm trading 10, 15 different quantitative strategies, because every time I find one with a consistent edge and I just throw it in there, it just smooths that equity return out for the long run.
I mean, one thing the problem I see with most up and coming traders is that they like to tunnel in and marry a ticker. Tunneling in, marrying the ticker, but tickers are not loyal, so they're not good spouses. So I love your approach,
and you can't get married to a ticker. I don't know about you guys, but
I've tried.
It ain't gonna love you back.
It doesn't work well. It doesn't work well. Infidelity at its finest. But I love that approach, Michael. Thanks for sharing that.
Yeah. So tell us a little bit, how do you find these? Are you more of a gap scanner? Are you specifically looking at daily charts? How do you go about that way?
Yeah, daily charts, really big for me. That's part of the variables. I like the stars to align. So multiple variables that make it the hand even sweeter and even better. So daily chart definitely comes into play. The strategy I like to trade the most, I got you, Fades. Monogamous trading. The strategy, one of my favorite setups is a hangover setup. Now, it doesn't involve being hungover, but what this trade is, I could show you actually an example. Let me see. There's a present button.
Yeah. By all means, go ahead. You'll get share screen and also window options there. So at the top tab, and then you can just go ahead and select it. And then let me know when you're ready to rock. Looking around, guys, NVIDIA starting to climb back to VWAP. I'm looking for that to kind of help this Apple move also really start to take off. Amazon, the setup, there's the undercut, there's the wicks. Now it's starting to get strong again. So 231s, I could go 231 off of 230s and look for this to start to climb. I talked about this strategy, how you're looking for those undercuts and rally. Now it's starting to rally. You see the change in the way it'll sell. Now it's like buy, right? So change in that psychology right there. We'll see what happens with that one. Coming to your chart, my friend. Let's see what you got here. You're on the screen in just 2 seconds. There you are.
You're a master with the transitions. So this is a hangover, and I got a folder of thousands of these. AGH, just an example. This just happened today, but it doesn't have to be a small cap play. This happens even yesterday with LEN, mid to large caps. This one, very similar setup. And I traded it yesterday, 119 dropped to 116. So how this setup works is you pretty much have a ramp all day. Let's say the prior day. So at the end of the day, I'll review all the tickers that are up that prior day. And what I'm looking for at that point is for it to be kind of opening below the previous close. So if you are tracking my cursor here, the previous close is 191. I like them to kind of open below that level, below VWAP, and to be kind of weak. I want momentum to be elsewhere. I want them to open up weak. We could look at LEN again. I have so many of these tickers, but just open below that previous close, open weak, not a lot of momentum coming into this name. And it's a psychological trade. So what happens is the longs that were all grinding this the day before, they're what? They're looking for a gap up. And when they don't get it, they start profit taking. And I like to see almost no volume in pre-market after hours, because that is a variable in this setup that aligns the stars, and it says, okay, nobody's coming into this name. Momentum shifted elsewhere. Let's profit take. And you oftentimes will get a dump and fade on these names.
Yes.
That's essentially what it is, the psychological aspect of it.
I like that trade.
Yeah. And I really like that you could, again, I always talk with this, that you go back to the psychology behind it, right? Because the market doesn't move because of magic patterns. It moves because those patterns tell us where the buyers and sellers are. So anytime, that was one when I was trading, in the prop firms and the hedge funds, there was always an exercise where someone would say, why are you in that trade? And if you couldn't explain it like that succinctly in like a minute or two, get out. So I really like the setup.
Yeah, it's a right or right out kind of trade.
Yep.
Exactly right. The good risk.
I also like how it's coming into plays with just kind of getting sleepy also, right? Because a lot of times these stocks are the hot stocks of the day, but then they come in the next day and they're looking at the next hot stock. They completely forget about this name.
Exactly.
And day 2, day 3 moves can be some of the best.
Dude, boring is profitable.
Yeah.
Seriously.
Especially with the small caps. You want some hotness and then kind of the story to cool off a little bit. That can cause both reactions, right? Either continuations to the upside or bigger breakdowns. Are you more a long or a short kind of guy here?
It is very rare I take a long.
Okay.
But there are a couple plays that on the swing side, I more gravitate to the longs on the swing side, swing approach.
Yeah.
But here's another one. I'm involved in this right now on Trade the Pool, YYAI. Sometimes you get variations, similar hangover, kind of spike out of the gates, shorten into resistance. And this one's just been fading, pulling back. I'm just kicking back with it. But I tend to be more involved in the short side. And the reason for it is I like most start off, it's a very similar story, starting out, with trying to, buy FOMO. And Steve went over those three fears he went over in one of his webinars, and that was great. Excellent. Yeah. Fear essentially runs the market. Human behavior never really changes. So shorting for me is more like reacting. When I used to long, I tended to like predict more of what was going to happen based off of like different kinds of analysis. And the ego would get involved, because I'm trying to predict volume coming in. Oh, I'm in early. I would get up like at 6 o'clock and try to listen into the earnings calls or whatever calls were going on. And I would listen in and be like, wow, this is actually good news. I'm the first here. And I get involved in it and it'd be crickets all day. So, news is a part of it, but then there's other types of analysis. You need trader analysis. You need chart analysis. You got to have price action. So shorting allows me to be kind of late to the party, if you will. Like I can react versus predict. What are you guys' thoughts on that?
No,
you can take the screen whenever.
It's a part of it, right? I think that's what you got to be finding what works for you, right? And I think that's what you found there is that at the end of the day, the longs didn't work for you. So you went after the other side of the game. And then the key is also understanding that at the end of the day, majority of these penny stocks are going to come down. It's like trading higher quality names to the upside. The truth is majority of higher quality names will end up going up. So the probability might be to long those names and the probability might be to short penny stocks, but you got to know what you're doing.
So the problem is that definitely the ego can get involved. Like we've been seeing this summer, even with these memes, because like what you just said, I think the longer you actually short some of these too, the more convicted you get and the worse it gets for you. Like you
like
see
let's say
that
like an
90 some percent of the time. Yes,
SBAD and
dude.
names like that, right? Like you're shorting this name, you can pay the price. You can pay
Yeah.
the price, man.
Especially with the over conviction, ego getting involved, scaling in, and I've seen people like blow up. I've seen really good traders actually. I go over this with Chad all the time. Like good traders blow, like they'll be a year or 2 years profitable and give it all back, marrying, one ticker, getting overly convicted. Like, dude, random risk is going to equal random reward. So
I think a part of that is what we talked about just a little while ago before you came on, Kevin. I think it's about taking maybe less of these and higher conviction, taking the trade, but also sticking to the risk and return profile, because that's just how these are. They're going to be low accuracy, but when you win hella big, not just big. You win hella big, and that's what you're looking for in these. And then what you can do is you can make it, where, hey, even if you're 20% accurate or more, you're not only break even, but you're winning. And I think if I can take a trade where you tell me, hey, 8 out of 10 times I can be wrong and still make money, doesn't sound too bad.
Yeah. I completely agree with that. I used to put more significance on like that number than it really.
The accuracy. A lot of people trying to trade like 80% accurate, right? I hear that thrown around like all the time. I'm 75. I'm 80% accurate. I'm 90% accurate.
What are you doing with the other 15%?
Yeah, exactly. It's not about just accuracy, right?
Yeah.
It's also about how you doing with the rewards and the risk and the losses. Because those guys, usually what's happening is they're making rewards. They're making very little rewards. Then one bad trade comes and it's kapooey, right? Even if you're 90%, that one trade cost you that 90%, right? So
I don't know the truth behind this, but I was watching this video, and that someone was saying that their reward was only 5%, their consistency rate, but that 5% was massive. Like they let that winner run and run and run, but otherwise they would stop out like immediately.
There's some famous hedge funds, some famous trading styles that live in that 10-15% win rate, but they get something, and this is multiple numbers of times returns. They get 10-15 baggers. If you think about it, a lot of value investors and guys, this is how they work, right? They take a bet on a company they think is a turnaround story and that the value is good here. And even venture capitalists, right? The whole idea behind that is you're throwing out, you're giving $1 million to everyone, and you hope one of them becomes a Robinhood or an Uber or something like that. That most of them are just gonna go away. So a lot of places in the markets and in the world, not just ours, that's a big tenant.
Yeah. And there's tons of these traders, man, though they're making those 90% but still losing, right? And so that's where I try to not put the pressure on myself, right? Because I feel like if I tell myself I need to be 90% accurate, I don't know about you guys, but I get an analysis paralysis really quickly. I'm like,
well, and it doesn't help,
right?
It's
paralyzes you from taking good setups.
Yeah, a lot of people think that more information means more money or a better setup. But, we were just talking about Kevin's setup there, the hangover. That's pretty simple, right? It's the idea behind it is pretty simple. And if he spent 5 hours doing analysis on one stock, I doubt it even ups his win rate. So he might as well go through, like you mentioned, a lot of the big winners and just pull out the ones that look the best to his eye and record them and move on, knowing that he's going to be wrong a lot. And if you're not okay being wrong a lot, you're in the wrong game.
In the wrong
game,
well.
Man. You got to lose well. But as Michael mentioned earlier, I think it's important, like even with the hangovers, take 10 or 15 at the open. I mean, there every single day, there's usually a few. And to involve yourself in all of them, even out,
play
keep
small.
the risk. Yeah, exactly.
Play small. And I think that you've seen it all throughout the kind of the blow up traders and things like that.
Oh, yeah.
It happens all the time, right? I think that, one of the things of Trade the Pool that is definitely different is that you don't get that moment, right? You get cut off and they tell you you're done for the day. Versus how it goes with a lot of traders. I'm sure you've seen them, Kevin, where they get married to one of these bad boys and then they realize that unrealized can keep going even past your money. And they'll come calling. Trust me. They'll come calling.
And you can't just delete the app, because that's what the kids on Wall Street Bet say, is that if you delete Robinhood, they'll leave you alone.
What? It comes in that thing that no one uses anymore. It's called mail.
Yeah.
And it comes in the form of a credit report, and it comes in a nice collection of. So don't be that guy, man. Don't be that guy that owes brokers $10,000 because
there are so many horror stories. I could get into them. E-Trade, there was a big one back in the day. You guys might remember.
Yeah.
Owing like $100,000 just short on something.
Happen.
And it just, you gotta.
It's gonna happen. And you think that the systems are gonna defend you and protect you. They're not there to protect you. Realize like this, and I say this even about every broker. There's always what you got to understand what you're here for. At the end of the day, you're here to make money. They're here to make money, right? Like we can keep things simple. Right? It's not. I'm not going to lie to you and act like brokers aren't trying to make money. That's a game. Like they need to pay people, right? So the truth is, how do we get around that? We get smart, right? We get smart and we focus that's part of the game. This is the game we're playing. It's not easy, but we can make money if we get smart versus trying just to act like things just land in your lap, right? Things don't land in your lap in trading, and if they do, it might happen once and never again.
Yeah, you're right. It's not easy, but you can make it easier. Like we can make it all easier for us.
All right. Before we get you out of here, I want to hear a story. Kevin. So you can pick. Either you can tell us about one of your best winners or one of your best losers and a lesson you learned from it.
Oh, the losers are always more fun.
Yeah, I have plenty of those.
Yeah.
So it's your call, man. What do you want to tell us about?
Let me keep it relevant to the marrying a ticker. I mean, this is probably 5 or 6 years ago. I'm a fairly conservative-ish trader. Like with this eval, I'm going for, I was going 9 days, I went $100 a day. And then ego was getting involved. So I contacted technical support and I'm like, I want to reduce the risk on this account. Thankfully, they reduced the max daily drawdown for me. So that's at $200. I don't want to lose more than 200 if I'm going for 100 on the day. And some people might argue, keep it to 100. But 4 or 5 years ago, I went in. I mean, look, again, I'm not risking tons. It was $1,000 loss for me on a smaller account, and it was significant for me. At that time, because it was pretty much the entire account, but it was me. And this is why I'm always teaching the guys, do not marry tickers. Cause it was me falling in love with a setup. It was NCTY. I remember like it was yesterday.
NCTY.
Yes. And I remember the first trade I ever took, dude, 10 years ago. The ticker's not around anymore. It was MGT, John McAfee Company. But yeah, NCTY, it was a setup. It was a inverse head and shoulders. The ticker was already way up, multiple hundreds of %, but I took the long there anyways, going all in, thinking I know better than everyone else. I recognize this pattern. Nobody else does. Pattern recognition is a small, anybody can recognize a pattern. There's several things I go over with the group often. It's like having a strategy is kind of superfluous to your trading journey. A strategy is important, but it just gives you potential. You need discipline to unlock this potential. If you don't have discipline, as we went over with the percentage, risk reward rates, it's just not going to work out. And then risk management is what's going to protect it. And then consistency is what's going to compound it. So I learned a big lesson, and as most do when we get started, that small account got blown up pretty quick, marrying that ticker. So don't marry them. Do not jump into something and only think reward. That's what gamblers do. They spin that wheel. They say, all I see is green. You gotta focus risk. So before ever entering the trade, say, what is my exit? And what's my entry based off of that exit? you got to predefine that risk before ever entering a trade. So a setup may look good, but if the risk is way off of what the reward's going to be, it may not be worth the trade. But yeah, that may not have been that exciting of a story.
Hey, I'll just say it like this. We'll wrap it up with a nice comment of, hey, you might want to give stocks a prenup.
Yeah, that's a good one.
You might want to give stocks a prenup, baby. I'll be with you for as long as you make me some money. But if you don't, guess what? The door's that way, and I'm ready to get on out of here. So I think that's kind of more of it. Give these stocks a prenup. Watch out there. Take the rides when you can get them. Right. I think you're a big wave kind of guy, riding the waves here. And also when the waves come crashing down, get ready for them, especially when they get sleepy. That's part of that hangover trade that I really like.
Yes.
The sleepy trades, especially in the small caps, are the ones to watch. The key is, like you said, too, not overreacting too early, because you can front run these often, and then you're just stuck sitting there. You're just like, what the hell am I even doing, dude? Like, I've been in this thing for an hour. It's gone up 2 cents. It's gone down 2 cents. Why am I sitting here? That's another thing that I talk about all the time, kind of like an inner ticking time bomb telling you, dude, just get out. Just get out. And it's okay to get out in a small loss there. Some traders are like, but I'm in the loss. Like, I'm going to take a small hit. It's okay.
Get used to it. If you want to be in this game, get used to it. You know,
start 4 scenarios you can be involved in, and one you don't. That is, you can have small winners, large winners, small losses, but not large losses. Let's keep the large losses out. We are everybody's going to have losses. Keep them small, because it's just a part of the game. Like, losses are going to be a part of it. Keep them small. We have control over that. What separates the best traders from everyone else is not that they have a crystal ball, but it's the fact that they know exactly what they're going to do in response to the market.
Yep. And that's built up discipline through execution. The only way to get it, guys, is by practice. That's the truth. We can tell you it. You ain't going to believe it until you actually do it, right? That's just the way it goes. Kevin, thanks for joining us. Of course, guys, the green team, guys. And where can traders find you if they want to learn a little bit more about the green team?
Yeah, Avery Day Trading. I can drop a link down, but I'm excited to hear y'all's stories too. Excited to get into that one day.
We'll hold that one for next time. He's going to be back, guys. We're going to be bringing on Kevin more often, bringing on different traders like we did yesterday. And stay tuned. If you guys want to learn more, or something interests you more about certain areas of traders that we bring on, make sure you guys reach out. There, I see the YouTube there, guys. You guys definitely reach out, give him a good follow, and learn a little bit more about what he does every single day. The green team, keeping it green, at least today. That's what it's all about. And Kevin, we'll have you back on. Thanks for coming on, man.
I appreciate you guys. Thank you for having me.
All right, guys, we'll start wrapping it up here at 11 a.m. I'll get right back to the action. Just give you a quick wrap up on me. Still in 2 longs on the day trade, still in 2 longs on the swing. Just going to keep riding it. We'll see what happens with the market. Market starting to go higher now. SPY really starting to catch. And like I talked about, we talked about how you said it itself, Michael, how yesterday it did this and started to grind higher. Now we're starting to grind higher. I even had to hold a little bit red there for Apple on this dip here, but I had a feeling, I was like, just got to keep the risk of what I would normally risk on the trade here, $50. Let's see it work. Now it's looking a lot better now. We'll see if this can really start to ride up. DNA still got a piece of that. We'll look to ride that. APLD on the swing. I saw a mention about Airbnb. You guys know your boy put it on the playbook today. Was looking for a break above 140s. Now almost 143. Let's go, Airbnb. Maybe I gave him too much money, but that might be it. I won't get married to it, but it's not a bad one at all. Any wrap up from you, Michael, before we get out of here?
No, just we're grinding higher, right? So it feels very buy programmy. Be hard to be short here, right? Just
hard to be short for sure. Hard to be short.
Uptrend. So
especially with the big cap names, right? I mean, Meta's having a decent day there. We'll keep looking to see if these names can continue to rise, and that's what I want to look at. Remember, I saw Nvidia down towards the low. It's almost back towards the high.
Yeah.
So like that's what you're looking at, especially these big mega cap tech. If they can continue grinding higher, every sector could be red and we could still go higher. But just to put in perspective, early on, there was about 8 or 9 sectors red from the open. Now only seeing 4 out of the 11 in the red. So, and very slightly red on real estate. So it's just maybe 3 names in the red from the open. Technology coming fast for that green. It's part of those 3 names. So it looks good in the market now. All right, that's going to do it for us. We'll be back, of course, on Monday, guys. Reach out to Michael Noss if you guys want to learn a little bit more about systematic trading. Like always, he does other great content. So you guys can check him out on Twitter. You guys see his tag there. You guys see my tag there. We'll keep pushing and leading you guys into what? Learning more about the stock market. That's what we can definitely do for you guys right here on Trade the Pool. See you next time.